To this live stream of Tesla's Q1 2022 results. We are going to be covering the results live that are going to be coming out in just about 10 minutes from when we're starting. We're starting 10 minutes before the markets close. And then we're going to wait an hour and a half while we're doing this live stream to go and cover the live call. Unfortunately, Tesla likes having this big gap between releasing the results, which are very prompt, more prompt than pretty much any other company. Literally the moment the bell goes, within a few seconds they usually come up. But then we're going to be going and listening to what they're going to say in the investor call. Elon Musk just a few minutes ago confirmed on Twitter in answer to one prominent Tesla person on there that they're going to be attending. So that would be quite interesting because Elon Musk traditionally has not been a very good thing for Tesla shareholders, him turning up to these calls, because he has a habit of not being the most politically correct person in how he presents information and the kind of things he sometimes blurts out. And also he will often say things that perhaps like he should have like kept to himself, like things which later are proven maybe to not be necessarily entirely accurate, etc., etc. So we'll have to wait and see. I'm going to share my thoughts. I'm going to tell you some of the interesting things that I want to listen to, and also in the time between the hour and a half between the results, we're going to be talking about a whole host of topics. Let me tell you what we're going to be talking about, just so that if you're watching this later as well, there's going to be quite a lot of like topical discussion as well. It's going to be hopefully an interesting conversation. If you guys have, I'm having you guys right here in the middle of my main screen, the chat. So if you have questions, things that I've missed, things that I didn't see, or anything else, please go and shout them out. It's going to be great. Tom, I'm still on the same camera. I do want to mention this is the first time that I'm doing one of these not from my living room. Despite how it looks over here, this is in fact not the same place that I was doing videos for 2 years. I moved 2 weeks ago. Most people didn't notice. I just happened to use the same IKEA furniture because I really like it. That stuff back there. But it's actually, I now have a studio, which is a really good thing because it means that I don't have a 3-year-old upstairs trying to disrupt my live streams, and I'm not a nuisance to him either. So that's a really good thing. Hopefully we can focus a little bit more and not try to sort of like push people out of the living room. I was literally doing these out of my living room beforehand. So just before we get into the topics, what is Tesla doing today in terms of share price? Tesla is 4.6% down, but a lot of stuff is down today, especially growth stocks. But Tesla is probably a bit more down than people expect. There are issues I highlighted that in one of the recent videos that got a lot of dislikes, a lot of hatred, a lot of people saying they really didn't agree with me. I highlighted that Q2 results are likely to be taken very negative by investor community, especially if you've been following the investor calls for some time. You might have noticed that in the last 2 to 3 quarters, all the investor calls are being triggered a lot more. So like if you're slightly off either way, the stock can go and lose 25%, like what happened to Netflix today, like 30-something% down. Insane. Like what happened to Facebook last quarter when they announced results that were slightly off, and then bang, their share price went and completely tanked like no tomorrow. The biggest single day drop in a single company ever, that day when Facebook dropped. We're seeing this more and more, and this is quite unprecedented. This certainly isn't something that we've seen previously. We have this climb down from COVID, which means a bunch of companies that profited during COVID, in particular like online social media companies and other companies like that, they are getting very very strongly reassessed because their volumes are coming down. So we've seen what happened with Netflix this morning, but it's been happening with everyone else, with Pinterest, with Fiverr, with any other company that was seen to maybe get a disproportionate benefit during the COVID bump. So anyway, 5 minutes or so until the markets close. So let's talk quickly. Hey, Damien, everyone's here. Hello, everyone. By the way, if you haven't subscribed to Tom Nash or Damien, the two people I just seen, they are amazing channels, far better than my own. So if you want to go and listen to actually good quality content, please go and subscribe to them. The topics I want to discuss later, we're going to cover a lot of stuff. We're going to cover questions that are going to be coming up as well. But what's the progress for Tesla with FSD? Because there's been a lot of talk. Elon's recently mentioned that there's now over 100,000 people using FSD globally. It was 60,000 on the last earnings call, so the number is obviously going up quite considerably. They just opened up to Canada, but despite all this kind of snippets, or they're like, oh, it's almost there. Oh, in two recent interviews, he said, oh, we think we're going to be having a product that's going to be publicly available later this year. The problem is we've been hearing the same thing for many years now. And so however much we all want to believe it, and however much it kind of sounds like it's there, and the videos confirm it, like the data confirms that we are infinitely closer than we were some time ago in terms of like how the software goes and is able to assess the surroundings, some of the hardware improvements. Although there was still news earlier today that some cars coming out of Berlin, I think it was, not coming out with AMD GPUs, despite the Shanghai-made cars coming out with them. That is a downside because that may affect the and some people are saying, okay, well, AMD GPUs, they're only going to be used for this gaming stuff. However, they also take a load of other system processing. The question is going to be like, are the cars today good enough for full, real mass scale, full self-driving? Are we going to be having yet another one of these hardware constraint issues, which we'll need to overcome in the future? Anyway, quickly on some of the other points. Q2 production issues, what's happening with China, what's happening with next steps, how big of an issue has the 3-week shutdown in China been? They restarted production this week, was it yesterday, day before yesterday, with one shift, and the shift is people living in the factory. So I think it's one shift. They usually work 2 shifts, but I think 3 or 4 brigades, depending on how you take it. So the production, even after restart, is going to be low. So the Q2 numbers are going to be impacted potentially even more than maybe some people expected. So what is the official position on that, and how does that affect things? Then we want to know, are there going to be any new factory locations announced? Previously in November at the shareholder meeting, I think it was November, maybe it was October, Elon said that they're going to be announcing new factory locations in the second half of this year. So we're not in the second half of this year yet. However, between that point in November and now, Elon Musk has also said that Tesla is now like going to be going down this new path of extreme scale. And there's going to be an interesting question of what exactly does that mean? When, like, so they've announced the opening of these new factories in Berlin and Austin. Are they going to be announcing at any point soon the extension? Because both of those factories have at least 3 more phases in like initial planning and development. And obviously those phases will still take time to build, maybe not necessarily the same amount of time because some of the infrastructure is already there, some of the initial supporting stuff is already there, but they're still going to take some substantial time to build. When they're going to start doing that, because there's going to be some lead times with that. What's the progress with the Shanghai expansion? Because the Shanghai expansion was due to complete at the end of April, but because of the shutdowns that we saw over the last 4 weeks and other delays that were reported before that, I am guessing we're not going to be seeing that until June or July now as well. Now, Q1 numbers came in slightly higher on production for Tesla than Q4, but very marginally, especially in deliveries. In deliveries, the gap was very different. And obviously, deliveries are what's going to be largely driving the value. Tesla's share price is dipping a little bit as we're running towards the end of the day. We are down over 5% at $976. So yeah, other points: robotaxi update, news updates on Cybertruck, Semi, and Roadster for anyone who's particularly interested in that. Supply chain issues. There's been a lot of rumors that Tesla is going to begin actually having to source their own raw materials, and Elon has alluded to the fact that he may consider doing that. There were rumors that they're going to be buying a lithium mining company that didn't come to be true. What's the progress on energy? Energy is probably the biggest elephant in the room that nobody talks about, because that, even in Elon's own words, is the biggest driver of what Tesla's long-term future outlook is going to be. Like, Elon himself has said that he expects energy business to be bigger in like a decade or so's time. And so far, over the last year, the stagnation in supply chain, the slow development of the 4680 cells and everything else has meant that the energy sector has really not moved anywhere much at all. So the question is going to be, well, when are we going to be seeing that ramp? Talking ramps, 4680 ramp, by the way, I'm going to be refreshing for the results because we are actually on the brink. 1 second. Let me just see if we get the results coming. IR dot. Let's have a look. Let's have a look. Have we got them? Not yet. Okay, I'm going to be refreshing it. If someone sees them, please do let me know, because I'm going to be talking as well. So 4680 ramp, what's the progress with that? So obviously Cato Road facility right near to Fremont in California is where they developed the initial production line, but they were showing clips of the 4680 cells now being made upstairs in in Texas as well. I'm going to be sharing the screen as well. There's nothing to share on the screen yet. So that's why I'm just talking while refreshing the screen, because there's nothing on there to talk about just yet. So we'll show the screen as and when it comes up. How is the ramp in Austin progressing? Because at the moment, the big question is, are the 4680 cells going to be slowing down the potential growth in Austin or not? And also, will Berlin and Shanghai make their own batteries, or are they going to be manufacturing them in Austin and Cato Road, or are they going to be relying on third parties because there's actual dedicated battery manufacturers going to be manufacturing 4680 cells under license as well, in addition to Tesla doing it themselves? So those questions are interesting. And then what's the pace of Berlin ramp, in addition to the question about Austin ramp and the 4680 cells? They said that both production lines are going to be targeting 500,000 annual run rates. How sandbagged are those numbers? Because I know Shanghai in the last report still said that it is like up to 500,000, I think it was, whatever. Total run rate, despite manufacturing in Q4 at a pace more like 750, 800,000, and going into Q1. So the question is like, are they sandbagging those numbers? And if so, are they sandbagging them even more? And the last question I had is, any robot updates? I'm not particularly interested. I'll be honest. I'm a bit different to maybe many other people who talk about Tesla in the YouTube sphere and the online investing sphere. I'm not particularly interested, if I'm completely honest with you, in the specifics, because I think we're so far out from understanding the timeline on robots. Remember, the Semi was meant to come out several years ago as well, and there's a lot of optimism and a lot of, oh, this year, next year is going to be coming. I'm a little bit more maybe conservative, call it what you want, in terms of my assessment of how much I think that's going to be bringing. I'm still not seeing the results. We're 2 minutes in. What's going on? And still no results coming through. I will share my screen as soon as the results are out so that we can all look at them and go through them. Remember, the market is saying, like, depending on who you believe, like 230, 235 earnings per share. I don't really particularly care too much about earnings per share. I actually think earnings per share is probably going to be around 252, 260. I think I shared in my Discord with my community a little bit before. I think it's going to be very, very marginally. It might even be lower than Q1. The reason being, than Q4. The reason being, in Q1, they actually went and hired a huge amount of staff into both Berlin and Austin. They went and had other expenditure. So before that, a lot of the expenditure in Berlin and Austin was capital expenditure, which is not going to be going into the P&L as a cost, right? So it's coming off the cash line in the cash flow, but it's not coming off. It's not Tesla streams the data, the report that's not come out yet. But the cost of, because you can't go and say build a huge factory and go and expense it immediately. That's not, like, in accounting, you have to take that as a capital expenditure, and you have to then depreciate it over a number of years and stuff like that. However, things like hiring staff and all the immediate sort of like getting things ready, the final maybe small fit outs and a whole bunch of other stuff, all of that is going to be affecting the P&L in Q1, because they're expending all these costs. Like Berlin had, by the time they opened, right at the beginning of April, 3,500 staff already hired. So a lot of that hiring, I'm presuming, will have happened during Q1. But despite all these costs being incurred, and especially some of the staff, especially the more senior staff, will have immediate costs on acquiring them by maybe some small options being given out, etc., etc., etc. Relocation. I don't know what it's going to be, but those costs will be incurred, but no production will have happened in Berlin to go against those costs. So although the revenues are going to go up, I'm actually slightly concerned that everyone's throwing out like massive numbers. It is true that Tesla has jumped up again. What? I don't know. So despite people, here we go. Let's go and have a look at the data. Here we go. The data's out. Let's look quickly through it, and then we'll read through it carefully afterwards, right? So Q1, automotive revenues up significantly by 900 million or thereabouts. That's a really good sign. Total revenues up about 1 billion, so good. That means energy is up slightly as well, so that's good. The automotive gross margin is insane. That number over there, 1 second. Here we go. This is the automotive gross margin. This is an absolutely crazy number. 32.9% is this is extremely good. Even the total gap gross margin, 29%. If you compare it to kind of the trajectory, these jumps are insane, especially given what I was just saying a second ago. That is crazy. Oh my God, 19.2% operating margin. For a company that was heavily investing cash, like from the P&L, from ops expenditure during this month, the fact that the operating margin jumped so much is insane. Now, there were several factors that are going to be impacting this. During Q2, we're probably going to be seeing this at some point during this presentation. They were selling a lot more Plaid cars, a lot more higher end. They prioritized cars that were higher spec towards the front of the queue to deliver during the quarter. So that although the total number of cars didn't move much, it's kind of shifted towards the more expensive end of car production. And the second interesting point is obviously there's been this ramp up in people taking out FSD. The third thing being it's kind of interesting. The Model S and Model X production ramp was still ramping during the end of last quarter, so those cars have disproportionately high margins in general. So that's what we're probably going to be seeing in a sec. But let's look through these numbers again. I'm sorry for the zoom on this, but hopefully you can see this well enough. Adjusted EBITDA 5 billion. So we're now getting to this point where net income 3.3 billion. Like if you look at the jumps here, these numbers are nuts, because when we begin looking at trailing 12-month numbers in terms of EPS and things like that, EPS 286 on GAAP basis, 322. These are crazy good numbers. What is Tesla's share price doing in aftermarket? Let's have a look. What's Tesla doing? I'm guessing it must. So 3.4% up in after hours. Is that 3.7%? So it's jumping up. Not surprised there. Not surprised there. But now let's go and where is it? Let's go and look through the results in a bit more detail and read everything, because I'm sure there's going to be a lot of interesting stuff in here. Just before we do, what do we got? Nothing interesting. We already knew the production was a bit lower than deliveries. Is that delivery number slightly higher than what they originally announced? Because they announced, 1 second, 310,048, and it is no, it's exactly the same. All right. So let's go and read everything they said. I don't know if anyone's not sure why I have discussed earnings. I've just talked about the earnings just a second ago. All right. All right. Okay. Let's go and read what this says. Highlights. Cash. Operating cash flow less CapEx is 2.2 billion in Q1. The energy bit towards the end of this presentation is where I'm particularly interested. So I'll be quite excited when we get there. Total debt ex vehicle and production under 0.1 billion. So, oh my God, what did they do? Did they just repay all the debt? Let's have a look at the balance sheet. Okay, let's have a look at the balance sheet. So where are we? Debt. Okay, no. So probably misread that, but long-term liabilities, other, yeah, okay. Debt is down. Current liabilities have gone up. I'm guessing because related to new factories, but debt is continuing to be repaid. I think it was auto leasing or something like that. Okay, what's the cash position? Cash position hasn't moved, so I'm guessing they've been spending a lot of cash there. Okay, let's go and read. Go up. There's lots of pictures. A lot of pictures to look through in a second. Okay, tell me if you can't see or can't hear or whatever. It'll be interesting. It's kind of surprising that Tesla's only up. So given the results are stellar, they are seriously out there. Despite the seriously stellar results, Tesla is only 3.6% up so far, 4% up in aftermarket. And I should be using something slightly better than Google here, but you know, it is what it is. I'll be better prepared next time around. School holidays, blame that. All right. So profitability, 3.6 billion gap operating income. That's what we saw, 19.2% operating margins. These are absolutely crazy numbers. 19.2% operating margin for a car company is crazy. We will see later, they have last quarter started showing this new graph of their numbers versus other automakers. It'll be interesting to see if they show that as well, because on that graph, that number is going to stand out by a massive amount. If you're looking through the results yourself, go and look at that chart before we get there, because if it's in there, it's going to look really good. 3.3 billion GAAP net income. 3.7 billion non-GAAP net income in Q1, 32.9% automotive gross margin. Crazy. Let's read the summary. The first quarter of 2022 was another record quarter for Tesla by several measures such as revenues, vehicle deliveries, operating profit, and operating margin over 19%. So basically every single good metric, they completely smashed it out of the park. Above expectations, significantly above my expectations. So probably above pretty much everyone's expectations, if I'm honest. So that's good. Our outstanding recourse debt has fallen below $100 million at the end of Q1. Public interest in sustainable future continues to rise, so they're pushing this debt repayment thing, which is, I guess, good, because at the same time they've been building these factories. That means they can now have a lot of cash to spend. Be interesting to see if they say what they're planning to do with the cash, because now that the debt is going away completely, and I'm guessing some of the other parts of debt are going to be going as well. In the next quarter or so, the big question is going to be, well, you have all this cash, what are you doing with it? Are you building those crazy numbers of factories that you were promising? Are you going to be giving them back as dividends at some point? You know, like you got to have some plan, or are you going to be investing in other businesses, or buying up businesses? Maybe buying up Twitter. We're going to come to that in just a second. All right, public interest in sustainable future continues to rise, and we remain focused on growing as fast as is reasonably possible. Expansion of our production capacity is core to our decision making. In the past 2 months, we began deliveries of Model Y from Gigafactory Texas and Gigafactory Berlin Brandenburg, negligible impact on Q1 gross profit. Unsurprisingly, because they didn't actually open either of those two factories during Q1 and legally did not sell any of the cars, so you could attribute some of the prepayments for cars that maybe were sold, I guess. I don't know exactly what they're going to be doing with that, but yeah, lots of costs, not very much revenue. At the same time, we are putting significant efforts into our in-house cell production, raw material procurement, and supply diversification. Challenges around supply chain have remained persistent, and our team has been navigating through them for over a year. In addition to chip shortages, recent COVID-19 outbreaks have been weighing on our supply chain and factory operations. So this has been a really big issue for Tesla. They shut down on the 28th of March, so they caught just the last 3 or 4 days of the quarter for Q1, the numbers that we're looking at, but Q2 is where it really gets hit hard, especially given that there's going to be processes where cars were starting the production line, but we're due to complete. So anything that was kind of rolling into April was stopped as well. And the biggest issue here really for Q1 delivery is because Tesla have this, so the biggest factory for Tesla is Shanghai. And in Shanghai, the way that the manufacturing works is they manufacture cars during the first month for sale in Europe, Australia, and some other markets. They ship those cars away. And generally speaking, like roughly towards the end of the second month, they start producing cars for sale within China. So you see the first like month and a half to 2 months worth of cars going out. And we are now going to be missing a significant chunk of that, because we have had 18 days during April plus a few days before April where we had a shutdown in Shanghai, but then we had 1 day delay for the factory to then reopen. We're now only operating on a single shift, so the production, even now that it's open, is going to be down. But that's going to have a disproportionately higher effect on the Q2 numbers, because when those cars that were due to be shipped to Europe are not going to be produced, they have two choices. Do they not ship cars to Europe at all this quarter? And that risks, customers in Europe being not particularly happy by their cars being delayed by an extra 3-4 months as a result. So Tesla would only do that to kind of bump their share price, right? Bump their production and delivery numbers, not production, but delivery numbers. Because if they do start shipping them, then the potential risk there is that the delivery will only take place next quarter. So that means that this quarter will have a relatively high production number, but a much, much lower delivery number, which is going to look a bit odd and a bit out of place. Okay, so that's probably going to be one of the questions that we're going to be covering on the call. So we'll come to that in a sec. Furthermore, prices of some raw materials have increased multiple-fold in recent months. Unsurprising, there's been some metals impact alongside oil and gas that are used for the manufacturing themselves as well. So a lot of issues going on, a lot of geopolitical issues on top of the existing supply chain issues we've already had. And obviously with a lot of demand for batteries in general worldwide, not just from automakers, but generally in the world, there's been a lot of pressure on a lot of the components and a lot of things that go into them. Tesla been leading the way in trying to find alternative solutions through iron-based batteries, through a bunch of other stuff, but we'll see. All right. The inflationary impact on our cost structure has contributed to adjustments in the product pricing. Yeah, Tesla have increased their prices for cars over like I think 2 or 3 times just in the first 3 months of the year during Q1. So that's probably contributed in part to the higher revenues. But they've also just been continuously every few months increasing them. Like it's almost like a bi-weekly event where some model gets an increase. And it's interesting because people are quite comfortable. Like Tesla goes and increases, or a car price by 5%, by 10%, and this happens like literally all the time. And everyone's like, "Yeah, that's fine, that's okay. I'm okay paying an extra $2,500 for my Model Y." But then last week they went they went and decided to start charging for the charger cable for plugging into regular mains. So like the kind of thing that you have in case you find yourself in the middle of nowhere without a supercharger or without a dedicated charger at your home. And people took massive offense to that because, oh my God, I'm going to have to pay an extra $250 or $200, whatever it was, for this charging cable. Not everyone needs it. Those same people completely swallowed the like 25% price increase on those same exact cars that preceded that particular event. So I thought it was quite interesting because it's basically the same. It's just an option. It's like a much smaller optional price increase. But people really didn't like it very much at all. By the way, hi to everyone. I'm sorry I'm not replying to all the comments. And it's nice to see a bunch of channel members and some people from Patreon on here as well. Thank you very much for joining. It's very nice to have you here. Okay, so let's keep reading. Despite a continued so the inflationary impact on cost structure has contributed to adjustments in product pricing despite a continued focus on reducing our manufacturing costs where possible. So the recent opening of the 2 new factories is further pushing the price down. So the 4680 cells in Austin are pushing the price over there down of production because those cells offer a better efficiency price-wise as well as a small benefit in terms of performance. So, but also they're now casting. So the Model Ys are being casted, the front part and the rear part are those factories with these new gigapresses that are being installed. The same process is going to be expanded to other facilities. I think in Q3 they're saying. So that's all reducing the cost and increasing the speed of the manufacturing. So that's all good. Okay, we would like to thank everyone who attended our factory opening events or watched live at home. We're excited to see people so passionate about mass manufacturing and sustainable future. Okay, the last paragraph is like, great, we had some parties. Okay, so just a recap for anyone who's joined late, very quickly, let's go through the numbers here for Q1. My mouse is doing funny things. What's going on? All right. I'm trying to zoom it in so that everyone can see, but for some reason my mouse doesn't want to work very well. Okay, so $16.9 billion in automotive revenues. This is actually really surprising. They managed to collect $679 million worth of regulatory credits. That is high. I think most people were predicting this number is going to now go away. Now that everyone's manufacturing EVs, everyone kind of thought, okay, well, maybe there's going to drop to 200, 250. However, remember in Q1 that GM stopped producing cars. They basically didn't produce anything during Q1. A bunch of other people. So Ford have recently stopped taking on orders for their Mach-E because they are like suspending production without telling people. So there's definitely been a lot of issues that, especially with the supply chain, that are seem to be hitting other companies much harder than they're hitting Tesla. Tesla seem to be slightly more favored by the suppliers of all of these things. That's pretty interesting. That number jumped over there. Automotive gross profit, 5.5 billion, which is an extremely big jump, more than people expect. And this margin, the automotive gross margin, 32.9% on gross basis. So this is after like taking the cost of making the cars. That is a pretty crazy number within the automotive sector. If you look at the same number for any other manufacturer, I'm sure we're going to be seeing that chart in a second. It's going to be a lot lower. Total revenues, 18.8. Total gross profit, 5.5, 29% margin. And for anyone who specifically cares about the profits, we've got 5 billion. We broke the 5 billion mark on adjusted EBITDA, 26.8% EBITDA margin. Net income attributable to shareholders is $2.86 per share on a GAAP basis, $3.22 on a non-GAAP. basis. By the way, I've seen a few comments in here. Yeah, if you haven't been following my channel, I have a lot of Tesla shares. My biggest position in my portfolio is Tesla. I'm going to cover the photos in just a second. Let's look at the energy first. But I also am not blind to the fact that there are going to be issues that I highlighted just now that I've been talking about in Q2 production. And I think there is definitely a risk when we begin seeing those numbers materialize, just because of what's been happening recently with any company that showed any sign of an underperforming quarter, irrespective of potentially some of their longer term outlooks. The impact can be quite severe. So I think just kind of closing your eyes and sticking fingers in your ears and saying, yeah, I don't care, like Tesla's great, whatever. I think you got to be understanding of the macroeconomic environment, understanding of what is likely to happen. Even like I'm holding my shares, but I'm also aware that there's going to be headwinds. All right, okay, let's talk. Let's quickly have a look. Statement of operations, cash flows. 1 second. Where is the P&L? Here we go. Let's have a look. No, balance sheet, P&L. Here we go. So I'm sorry, this is a bit small, so you might not be able to see it very well. How big can I make it so you can still see everything on here? Okay, so let's have a look down the energy side of things. Energy generation and storage went down 616. So they announced some really big projects. They published pictures of, I think it was in Alaska or somewhere. They built a huge array and in some other places, but services has gone up by 200. So this is like probably going to be the space that's going to be exploding as FSD and other things begin getting more traction. The marketplace they're building within cars, I'm not sure exactly how much traction that particular bit is going to get, but maybe some. But automotive leasing up slightly. So on the energy, it's quite disappointing because obviously, like in a lot of people's predictions, people are saying, when is this energy part of the business going to start actually driving anything? Because look, here is the energy revenue, and you can't see it maybe, but it's $616 million. But energy, the cost of revenues just for the gross margin of energy is 688. Oh, my mouse is doing funny things. It's not liking me. I think because I'm trying to do too many things on the computer at the same time. But so energy is losing money and in Q1, and the revenue is not going up. So that side of the business is something to be concerned about, because long term, this is where the value should be had. And the question is, are they actually going to be ever beginning to get the traction needed there? And the 4680 ramp is probably what's going to be the reason. So they're waiting for that to start actually pumping on that front. They're not focusing attention on that. They're not focusing people. I'm guessing that's what's going to be the conversation. That's where the conversation will go. But now let's read the financial summary. So we've kind of looked at the numbers. Let's look at the financial summary. Total revenue grew 81% year on year in Q1 to $18.8 billion. Year on year revenue was impacted by the following items. By the way, Elon Musk did recently say that the 50% a year target that Tesla have is no longer applicable. I think he said that he's now considering that Tesla should have something more like an 80 to 100% target. So it's interesting that we are above that. And the question is going to be Q2 accepted. What's going to be the situation with this year-on-year growth when we progress through to Q3 and beyond, as Austin and Berlin both ramp, because the capacity there potentially can be very high. Growth in vehicle deliveries, increased average selling price, so that's the bit that we discussed before as the likely reason. So both selling more higher priced cars in terms of models, but also within the models prioritizing cars that are more expensive for deliveries. Growth in other parts of the business. Interesting in terms of what this other parts of the business is, because obviously energy is not growing anywhere, but the services line item grew slightly. I think I'd be interested to see what they mean by that. Profitability. Our operating income improved to $3.6 billion in Q1, resulting in a 19.2% operating margin. This profit level was reached while incurring SBC expense attributable to the 2018 CEO award of $48 million in Q1. Year-on-year operating income was primarily impacted by the following items: the same growth in vehicle deliveries, increased ASP, reduced cost per vehicle despite inflationary pressures, lower stock-based compensation expense, increase in regulatory credit sales, rising raw materials, commodity logistics and expedite costs, interesting logistics and expedite, because presumably these are the ones that are going to be beginning to come down as we're seeing ramping in those additional factories. So that's one to keep an eye out on. Increase in operating expenses. All right. Cash. Quarter end cash. I have some questions on that. It'd be interesting to see if this point gets picked up, because cash obviously hasn't moved. So what's been where has it been going? I've not looked in any detail. By the way, I am going to be missing a whole bunch of stuff. If you're picking up things that I am not seeing, please tell me, because I am seeing this live, and trust me, talking about it live is far harder than just going and looking at it all by yourself live. So I'm going to make a lot of mistakes, and I'm going to forget and miss things and not see things. So if you see things, please help me out and go and post in comments. Okay, quarter in cash equivalents, and short-term marketable securities increased sequentially by $0.3 billion to $18 billion in Q1, driven mainly by free cash flow of $2.2 billion, partially offset by debt repayments of $2.1 billion. Debt repayments are going extremely well for a company that's been investing so much in capex. That's an extremely strong sign, because it kind of indicates, if you just think about the 17.5 whatever it is billion dollars they have sitting there, like what they can do with it in terms of pure cash, and I'm guessing this is including quasi items as well, that can buy you like probably close to 3 factories just there and then, without having to earn a single dollar. So that's going to be interesting. Okay, operational summary. We already knew the production numbers. 310,000 deliveries, 305,000 produced. So we have global vehicle inventory supply 3 days. So this is a number that's sort of like a rough indicator of demand for the car. So as the ramp in production and deliveries is increasing, also the number of days of inventory that they have at any one point is reducing. So the demand is rising faster than the rate at which they're increasing production, and the rate of production is up 69% year on year. So all this stuff, when people say, hey, look, like Tesla's demand is dropping, Tesla is like, it's past it and stuff like that. These are the numbers that you need to look at, to be aware, to kind of say, the data is showing the exact opposite. 3 days, wow. Energy, solar deployed 48. Nobody really cares. I mean, I don't really care. I think that's like that's an irrelevant side hustle business. But storage deployed 846. Oh my God, it's dropped again. So look, typically Q4 tends to be like a big number for storage, but they said that Q4 was down because they chose to prioritize batteries going into vehicles instead of storage. And obviously it's dropped again over here. So yeah, there's 90% year on year growth because you're comparing it to this Q1 number here, but these are highly volatile at the moment, and really we would have wanted to see these grow, but they're not growing. I'm guessing we're going to address this on the earnings call at some point directly or through a question. Because people, and it's really closely tied to the 4680 ramp. Like, when is the ramp going to be big enough to be able to supply all of the different factories? How many locations are going to be producing? And also to begin ramping this energy business, because that's the obvious next expansion opportunity. Store and service locations. Opened up another 18 stores. Mobile service fleet, great. Superchargers. Okay. The superchargers grew by a little under 10% quarter on quarter. Supercharger connections grew by seemingly a little bit less than that. So they based on this are building a few more smaller superchargers than the average of what they currently have. The difficulty is that they need to ramp this, in my opinion, a lot faster at some point, for 2 reasons. One, they manufactured, if you look up here somewhere, wherever it is, they manufactured 305,000 cars and sold 310,000 cars in the quarter. And during this, by the way, there's been a few people thank you for answering the questions, for everyone who's answering the questions on my behalf. Really appreciate it. But I'm going to be streaming all the way through to past when the earnings call happens. The earnings call is going to be happening in 1 hour from now, which is going to be 10:30 UK time, 5:30 p.m. EST, 4:30 p.m. Central Time. I think I got that right. Maybe I screwed something up. Whatever it is, in 1 hour from now. So the problem with the supercharger that is this number is quite high, because in total before this quarter, I think, I can't remember exactly, I did the math at some point, but there was like 2 to 2.5 million cars on the road. So they are adding significantly more than 10% currently in a quarter to the existing total Tesla fleet, if you like. However, the volume of superchargers is not expanding in the same rate. And there are already issues in some of the more densely populated areas in places. I know people have destination chargers, and there's an increased focus of people installing them at home and stuff like that. However, if Tesla really wants to do this, crazy, expansive growth in selling their cars, they're going to need to begin ramping. And I said the same thing last time, because the rate of increase in superchargers is substantially below the rate at which the cars are growing, and that's potentially going to cause issues down the line. You can kind of see like the rate of growth here. So 38% year on year, 37%, while the cars are growing at not quite, but almost double that rate. That potentially is going to cause issues. But also, if you remember, I think it was 2 or 3 quarters ago, Elon Musk made that bold statement, and maybe it was even before that. They were saying that they're going to do a trial run, and I think they did, in Denmark and Norway, where they're going to be offering the owners of other electric vehicles the ability to use superchargers at cost and charge them more than you would charge Tesla owners. And if they really want to become like the new default, because they are first to market, and I know there's a bunch of there's like Electrify America in the US and a bunch of other people trying to do this, in terms of the actual product, the ease of sorry I need to drink more tea, the ease of use, the simplicity of it, the supercharger is really doing a lot more. And if they really want to kind of become the energy provider of choice to electric cars as well, which I think is a very smart move, because it combines the two things they're particularly strong at, the mega packs potentially storing energy, and then the superchargers dispensing it to other cars, they're going to need to ramp that up. And again, there's no signs, and this is not really necessarily at the moment constrained by any issues with batteries. So we'll see. Netherlands, yeah, somebody's saying Netherlands. Okay, I got that one wrong. They were doing that trial. So it'll be interesting to see if they address that point at all. I'm guessing it's probably going to be avoided and nobody will even notice it. All right, let's read this. First, let's look at this table, because this table is still the same. Shanghai is apparently currently at a greater than 450,000. And given that they were manufacturing at more like 750, 800,000 annual run rate over the last couple of quarters, excluding the times when they shut down, that is a somewhat conservative estimate. California, they're saying they have a 600,000 capacity, just like was before. In Berlin and Texas, they're not indicating anything just yet. Early ramp. So it'll be interesting to see. They previously said they're aiming for 500,000 in each, but again, how stand back those numbers are, we will have to find out. Interestingly, if you look here, we have Model Y early ramp production, Cybertruck in development. But here's and I pointed this out before. They have TBD, so additional potential locations for Tesla Semi, Roadster, and Future Product. Now, Future Product has been in there. We were talking about maybe it's Model 2 or whatever, the smaller compact car. Now potentially maybe it's going to be that robo-taxi. It could be anything. But the problem is, people keep saying that the Tesla Semi is going to be manufactured in Austin, and I think they presented it at the Austin opening as well. But there doesn't seem to be the right amount of space and capacity, especially if they're going to be manufacturing Cybertruck in the existing Phase 1 building as well. And this is indicating the potentially... So they manufactured the first initial handmade, pretty much, models in Nevada, because they have a factory in Nevada where they... build energy stuff, not car stuff. So I managed a few of them there, and they were testing them there. So are they going to be expanding in Nevada? Are they going to be building a phase 2 location within Texas? In which case, should this be under Texas? Anyway, let's read what it says over here. 1 second. Let me zoom in on this so you can read it a little bit better with me. Okay. So in Q1, we saw a continuation of global supply chain, transportation, labor, and other manufacturing challenges, limiting our ability to run our factories at full capacity. US, California, and Texas. In April 2022, we began Model Y deliveries from our new factory in Austin, Texas. At our Cyber Rodeo opening party, we delivered the first vehicles with 4680 in-house made cells, single-piece front body castings, and structural battery packs. All things we discussed. We didn't really touch on the structural battery packs. Another innovation where the battery pack is part of the hard structure, if you like, of the car. So traditionally, and how every other manufacturer currently makes them, pretty much. I think there's maybe one exception. But the car shell is made, if you like, and then the battery pack is like a component that you fit within the shell. And the interesting thing with the structural battery packs is that the actual structure of the pack itself is part of the hard shell of the car, and that saves on production costs, it saves on weight, it saves on production timelines as well. So that is a technical but a very useful innovation Tesla been pushing. It's probably going to become standard with other manufacturers as they develop their own tech as well. This is an important milestone for our capacity growth efforts. Later this year, we expect Gigafactory Texas will be able to produce Model Ys using both structural packs with 4680 cells as well as non-structural packs with 2170 cells. Now, this is interesting because this to me is a negative statement despite how it sounds. So if you had the capacity, the belief that you have the ability to go and ramp 4680 production to where you need it to be, 4680 cells are cheaper on a per unit of energy to produce. They give some slight benefits in terms of heating and distribution of heat, in terms of performance, not huge, but slight benefits as well. So if you were able to ramp that, you would probably want to go and use them in every car that you make because they're like better in pretty much every single way. So the fact they're continuing and they're saying that Gigafactory Texas will also be manufacturing non-structural packs with 2170 cells, my take on that is potentially the 4680 ramp is going to take a bit longer than people expect. So we're going to be like continuing to sell cars with 2170 cells going well into next year, probably like maybe even beyond that. And the question people are gonna have is why is the ramp slow? Number one. Number two, like what commercially is there a good reason? Are they substantially cheaper with 2170 cells? And what does that mean? So that statement there at the end, the Gigafactory Texas, the brand new factory, where at the opening they were proudly showcasing the manufacturing of 4680 cells. They showed a whole video and say all of the shots in that video were filmed at this factory. So we're making a really big point out of the fact that 4680 is going to be the thing. But the fact that they're already planning to start manufacturing 2170 cells, in my mind, that's a negative, and that's not necessarily a good sign. All right, China, Shanghai. While weekly production rates were strong in Q1, a spike in COVID-19 cases in Shanghai resulted in a temporary shutdown of our factories as well as parts of a supply chain. Remember that Shanghai also closed for Chinese New Year, and also there was a 3 or 4 day shutdown, like 10 days before the shutdown due to COVID-19 happened as well. So there's going to be issues with production in Q2 for sure. Okay, and then we say, although limited production has recently restarted, we continue to monitor the situation closely. I'm guessing we're going to have a question on this. I'm guessing it's going to be one of the 2 most popular questions. I have the questions open here. I haven't really looked through them, if I'm honest. I was doing bedtime just before coming here. So, production at Gigafactory Berlin-Brandenburg started in March 2022 using non-structural packs with 2170 cells. Another kind of, I highlighted this before, and the fact that they started a brand new factory with 2170 cells indicates they're probably not expecting the ramp of 4680 cells to be going particularly fast. Obviously, some constraints in the production. So they have Cater Road facility that they test run production on them. And they're now manufacturing in Austin. There's going to be a lot of questions on this, I think, if everyone else reads this the same way that I'm reading this. Okay, ultimately, Gigafactory Berlin-Brandenburg will be able to produce Model Ys using both structural packs with 4680 cells as well as non-structural packs with 2170 cells. So again, even when they make the switch, and there are rumors that the switch is going to happen in Q3, I reckon it's probably more likely to happen in Q4 or something like that, given the delay to all timelines. They're saying even when they switch to 4680 cells, it's not going to be on all production. It's only going to be on some of the production. So the big question is going to be why that is. Okay, here is a graph of all lines going up. US, Canada, Europe, and China, and all the numbers are going up very nicely. China, see this little dip in terms of the growth rate? A little bit of that dip is probably going to be that pause in the 3rd month of the 1st quarter in March, the pause at the end of the month, the pause like 10 days before that, and the Chinese New Year. So that's probably partly responsible for why we're seeing that slight dip over there. Okay, market share of Tesla vehicles by region. This is interesting because we're now looking at this and we're going, look, Tesla is beginning to actually take an actual market share of the total vehicle production. So what, when if you've been investing or following Tesla for a little while, like I have, like when you watch people talking about it a few years back, people are like, it's negligible. It's like, the number of cars a Tesla manufacturer is a rounding error. That is a common phrase people would use for any other large manufacturer. So the interesting question is going to be when that rhetoric begins fading, because we're now seeing, 2%-ish average, and the US is over 2.5% of all cars being sold being Tesla. And certainly, I don't know where you live, in the UK where I live, the increase in the cars that you see that are Tesla, oh my God, what's this? What's this chart? Total vehicle growth. Oh, this is hilarious. I'm going to tell you why this is hilarious. The Super Bowl effect. Okay, does it say something about the Super Bowl effect in here? Because it's hilarious. I'll tell you. It's not saying anything. I know why they introduced this graph in here. So Tesla doesn't spend money on marketing, right? So what was interesting is when the Super Bowl aired, the prices for Super Bowl ads actually went up significantly this year compared to last year, because I think like they kind of thought that, oh, COVID's going away, everyone's going to be spending the marketing dollars, etc., etc. And the funny thing is, Tesla didn't spend any money, but a lot of other EV makers did, Lucid included. So a bunch of other people went and spent a huge amount of money on that, even when they weren't actually selling cars at that time. So they were like marketing cars that weren't going to go on sale for a while yet, have not even gone on sale now, or they shut down production but ran the ads anyway. And look who got all the sales without having to spend any of the dollars. I love it, because this graph is just introduced here just to take the piss out of all the other EV makers and all the other car companies who basically paid for Tesla's cars to be advertised. Absolutely hilarious. I'm not sure what the graph is off, because oh, the titles are underneath. Gross orders. So everyone went and made, and if this is a to scale graph, because there's no Y scale, there's just a 0. So it's zeroed, but if it's a linear scale graph, we saw a doubling. That's pretty funny. And this is the graph that I said would be one of the graphs that'd be interesting to see. So gap operating margin. There was another graph on here that they've kicked out to show this graph. That was also interesting in terms of shares. But look at this. Tesla's Q1 gap operating margin is climbing while everyone else is being largely stagnant, and the likelihood is that when we see the update for all of these gray lines for all the other manufacturers, they're going to be below. So for Q1, Tesla has now overcome in terms of like fixed profitability on a per car basis. So that's going to be interesting when we begin seeing how far this develops, because now that we have Berlin and Shanghai opening, that line is only going to go up because cost of distribution is going to be lower, localized production, localized sourcing materials, localized delivery, like costs are going to drop. They already incurred during Q1 some of the costs to do with these additional factories without even selling any cars from them. So and yeah, I would not want to be one of the other car manufacturers looking at these numbers, because this is like sticking a two finger salute to the other car manufacturers. There's no other reason why these charts are on here. It's funny. Okay, let's read this. Autopilot and full self-driving. There's going to be questions on this for sure. FSD beta development continued with 7 software updates in 2022. Our team continued to work on reducing disengagements, particularly focusing on unprotected left turns and smoothness of the ride through reduction of slowdown events. We are aiming to release FSD beta to all US FSD customers before the end of this year. So, I mean, this is not just an Elon tweet. This is now in here. So that's potentially going to be big, because if they are going to be charging all these customers the sort of $200 monthly subscription, or whoever wants to buy it outright, in terms of just free revenue once the R&D money is already spent, that is not a bad service software as a service revenue for any company. And if the number of cars that they sell continues to increase, and those cars are the cars that are selling the software, are we going to be having a Microsoft style issue where, cars sold at some point in the future, there'll be a court case where the EU or the US regulators are going to come to Tesla and say, no, you have to allow the customer to choose another company's software to install in your car, not just bundle FSD software and your own software in it. That'll be quite interesting if we ever get there. I mean, like, it sounds ludicrous now, just like, it would sound ludicrous when Microsoft was starting out with Windows, but there we go. All right, and vehicle software. In Q1, we added a mobile app controls for climate control modes, dog mode, camp mode, bioweapon defense mode, and cabin overheat protection. It's interesting they're devoting a massive section here to that. I mean, it's all cool, but enabled users to customize the color of their vehicle. Is it really? In the UI with metallic and matte finishes, and brought Disney Plus to more countries worldwide. We also improved charging time estimation accuracy by accounting for battery temperature and allowing child lock to be engaged on individual rear doors. left, right, or both? Extremely specific. Probably most of this somewhat unnecessary in a quarterly report, like the fact that you can customize the color of the vehicle on the map or whatever in your software. I'm kind of curious as to why. I can't think off the top of my head what the purpose here is. This to kind of rub it in to the people whose like screens and architecture still look like they were made in 2002? Is it to rub their face in sort of like we are solving issues that are so far? I don't know. Like, you tell me, what do you think? Like, what, am I misreading this? Like, what is this really necessary? Like a third of a page here? Okay, battery powertrain and manufacturing. Diversification of battery chemistry is critical for long-term capacity growth to better optimize our products for their various use cases and expand the supplier base. This is why nearly half of Tesla vehicles produced in Q1 were equipped with a lithium iron phosphate battery containing no nickel or cobalt. So LFP batteries are those sort of like blocky kind of batteries that you can go and fit instead of the cylindrical style batteries that are the 2117 and 4680, and the cheaper cars are coming out with them. They don't necessarily have as much range. Currently very cheap to go and use. Rumors they're going to be ramping production of those as supply chain issues ease, because it is just easy. They already have the capability to replace one pack with the other with relatively minimal disruption. So, as well as commercial energy storage applications. So LFP and commercial energy storage, I guess because they're stationary, you can just build more of them if you need to. I don't really know exactly how LFP stacks against the other battery types in terms of like longevity of use and all of that. That's probably going to be a big factor there, but they know this far better than I do, so I'll go with their take on this. As a result of our energy-efficient motors, a Model 3 with an LFP battery pack can still achieve a 267-mile EPA range. This is good. So they're kind of saying the most basic vehicle that we have is still hitting a range that for most people is more than sufficient. You're probably unlikely to be driving substantially more than that in a day. And even if you are, the likelihood is going to be stopping somewhere along the way and probably getting 20, 30 mile charge, which will give you 80% of your battery range back. So yeah, they're kind of saying they're kind of indicating that in addition to the 2170 cells and 4680 cells they're talking about higher up in this presentation, they're going to be expanding LFP so that they can do that. We haven't had any conversation so far in this presentation about how they're planning to ramp. I'm guessing that's going to be coming on the earnings call, so stay tuned for that. That's going to be the most interesting thing. Also means that I can drink a bit more of my tea. I actually made myself 2 cups of tea, and I made myself 2 glasses of water for when I completely lose my voice. So I'm not sorry. I think I misexplained. I'm not saying they're pouch batteries. I'm saying that the form factor in which they get supplied to manufacturers of cars typically comes in blocks rather than the sort of like the single pack that you have with the cylindrical individual batteries. Anyway, not particularly interesting. Different kind of battery. We're not an engineering channel here. Okay, energy storage. What do we got here? We've got some pictures. Let's look at pictures first. Pictures are always more interesting. Insurance. Yeah, so Tesla started rolling out insurance over the last few months. So that's going to be part of their services sales, and that's very exciting. They're now in 5 states? I can't remember. I'm sure we'll get to it in a sec. They're showing that you get a safety score, and your insurance gets calculated based on your safety score. They're also using the same safety score to assess people for FSD. So this is all just example screens of what the Tesla insurance is doing. And this is services and other gross margin. So this is kind of where insurance plays in. And they're kind of saying, this is interesting, they're saying the gross margin of services has been negative because of there being so much cost of building out the initial stuff. But we are sort of almost at zero. So they're saying, based on this, I'm guessing that the reason this graph is here, that from next quarter onwards, the services that Tesla offers are actually going to be contributing to profitability. So that 5 billion profit figure that we were seeing, currently that is in spite of, rather than because of, or partly because of all of this. All right. Okay, so energy storage. Energy storage deployments increased by 90% year on year in Q1 to 846 megawatt hours, mainly driven by strong Powerwall deployments. As demand remains substantially above capacity, growth has been limited by ongoing supply chain issues challenges. We are in the process of ramping production at a dedicated Megapack factory to address the growing demand. Interesting that they kind of said a dedicated Megapack factory rather than reference Cato Road like they have done before. Are they saying that there is a new location where they're planning to do this that is neither Austin nor... do they mean Austin? Do they mean Cato Road? Do they mean Nevada? Do they mean somewhere else? Raises a few questions. We'll see about that. It says energy storage deployments increased by 90% year on year to 846 megawatt hours, but we just saw that that is probably not necessarily the most accurate depiction of what is actually happening when energy storage was actually dipping quarter on quarter for the last few quarters. So yeah, it's like I would say this is probably not necessarily the most fair way of portraying that story, but there we go. Solar retrofit and solar roof for anyone who particularly cares about that. Solar deployments decreased by 48% in Q1 to 48 megawatt. This reduction was caused by import delays beyond a control of certain solar components. Solar roof deployments continued to grow year on year. Cash and loan sales account for nearly all deployments. Okay. Negligible impact on anything in the grand scheme of things. Services and other. In Q1, services and other gross margin remained close to break-even, minus 0.6%. Year-on-year improvement was driven by strong used car sales, as well as growth in merchandise, Tesla-owned collision centers, and related services. So this is interesting. So they're saying they used car sales. So obviously, they go and buy cars back and then sell them back. And you noticed maybe recently in the last 3-4 quarters that used car prices have gone completely crazy. Where at one point a used Tesla cost the same, or in some cases more than a new Tesla, because you couldn't get a new Tesla with any reasonable timescales. It's mind-bogglingly crazy. Our insurance business continues to expand with recent launches in Colorado, Oregon, and Virginia. In these states, Tesla acts as the insurance carrier, which means that we are the underwriter and bear financial risk. And this is critical because, as well, like it's not mentioned here, but as well as obviously bearing financial risk, being a carrier rather than just a reseller or an agent or a third party of some sort, because you're legally mandated to be, this means that Tesla can now reap the entire financial benefit of this as well. And here is the amazing, unique thing. This is the sort of the symbiosis that you see with Apple, for example, where they build the hardware and the software that works with the hardware. Here they're selling insurance, and then the cost of the insurance, the sort of like the cost that affects the profitability of the insurance, is the frequency or the likelihood with which the cars that you manufacture happen to get into accidents. So if you go and build FSD software and all the additional driver aid tools, like for example the fact that Tesla cars automatically evade an accident if they sense through their software that one is about to happen, that a car is about to T-bone them, or somebody coming up behind them is about to smash into them or something like that. You probably saw some of those videos. The Tesla will like literally try to evade those. Means that if you are the market leader, which Tesla is in those kind of things, then you get to benefit from not only selling cars because people want to have cars with those features, but also being able to make more money on insurance, as well as potentially offering it lower price to people because you can. So you kind of like killing two birds with that one development stone, because now you're earning money on the insurance because your incidence of accidents is going to be lower as well. So that's quite interesting. Jason's saying, someone let Sasha know this is the answer to his Megapack factory. What is the answer? LFP longevity is around 2x. Is that what people are saying? Okay, good. Somebody's saying, why people watching this video come to meet Kevin? If you want to go to meet Kevin, go to meet Kevin. I'm just here sharing my thoughts and opinions in my own way. You know, there's more than enough space. If anyone wants to head over there, please do. But we're gonna be reading through some of the rest of this pack. All right. Volume. We plan to grow manufacturing capacity as quickly as possible over a multi-year horizon. We expect to achieve 50% average growth in vehicle deliveries. The rate of growth will depend on our equipment capacity. Let me just zoom this out ever so slightly so we can read this all in one place. 1 second. Let me just get my face out of the text. Sorry. The rate of growth will depend on our equipment capacity, operational efficiency, and the capacity and stability of the supply chain. Our own factories have been running below capacity for several quarters. Our supply chain becomes the main limiting factor, which is likely to continue through the rest of 2022. Okay. Interesting. What else we got in here? cash. We have sufficient liquidity to fund our product roadmap. No shit. Excuse my French. Long-term capacity expansion plans and other expenses. When you have a mountain of cash, we're going to get to that in a sec. And almost no debt now. We're probably 1 quarter away from having no debt whatsoever. Profit. While we continue to execute on innovations to reduce the cost of manufacturing operations over time, we expect our hardware-related profits to be accompanied with an acceleration of software-related profits, the services and other. The pace of production ramps in Austin and Berlin will be influenced by the successful introduction of many new product and manufacturing technologies in new locations ongoing supply chain-related challenges. Factory ramps take time, and Gigafactory Austin and Giga Berlin Brandenburg will be no different. So I think we're going to have a more detailed question on this because, yeah, it's great. Influence successful introduction of many new product manufacturing technologies is very, very general. Factory ramps take time. Yeah, we're aware. We're making progress in the industrialization of Cybertruck, which is currently planned for Austin production subsequent to the Model Y ramp. And this is the thing that I addressed before, which is if we're going to be seeing a continuous delay of pushing back the Cybertruck to by a quarter every quarter, which is kind of like what we're seeing now, if not worse, I think that's probably not going to come like not going to be very well received by the investing community if the numbers dip in Q2. So that's a risk for sure. Photos and charts. Yes, we finally got to the best bit, the photos. All right, what's this? This is Elon just before he goes and does a funny dance at the opening of the Berlin factory. Very insightful. This is somebody driving away their first Model Y. Production line of the Model Y body shop. To be fair, these are not as exciting and interesting because in the last few quarters we could judge some kind of progress in the building of the new factories. But these are now sort of looking much alike, like, you know, like great, like if instead of Gigafactory Berlin it told you this is Gigafactory Shanghai or Austin, you probably wouldn't know any better. Great. And they did a big fireworks display at the Cyber Rodeo in Texas. And another picture of the fireworks as a reflection in the factory. And the presentation that happened a few days ago for the opening party. All right. Body shop, great. A lot of panels. So this is kind of what I was referring to in terms of the potential issues on the Q2 numbers in Shanghai. So some of the components for the production of cars are not like made immediately. So the total production time for the cars is relatively short, but that is spread over a period of time. So the fact that the production got shut down at the end of March for 4 days before we started the Q2 process probably means we're going to be delayed a little bit on like the ramp up of that production, even aside from the shift issue, because we're only running one shift in Shanghai. All right. Simplification of vehicle structure and manufacturing. This is the bit that they were highlighting a lot in the presentations when the two new factories opened. Same Model 3 body structure, 171 pieces of metal highlighted. Austin made Model Y body structure, 2 pieces of metal highlighted. So they're saying this is one structural component over here. This front stuff is crumple zone, so you don't want to be building it as part of your overall structure, because if you're ever in a car crash, that bit needs to be replaced, naturally enough. So you don't want to be, you know, so you got to have some wastage over here, some wastage behind over here. But 2 large components. These are made as a single piece, as a giant giga casting machine that goes and squirts a whole load of metal under high pressure and spits out a giant piece. And every other car manufacturer is still making cars like what they're showing over here, with a whole load of individual parts. And you not only have to produce the individual parts, which is adding a whole load of time, you also have to then weld them. That introduces a whole load of unnecessary weight, because you have to have the bits on each part that connects to the other parts, and then the weld itself. And that obviously affects efficiency, affects cost of production, because like materials cost more. So you have an initial large cost of building the system for building these casts, but after that production becomes relatively cheaper. So some key metrics quarterly. These are just chart representations of some of the numbers that we were already looking at. Let's see if we can zoom in slightly on these now that we saw the photos. We have vehicle deliveries, Q1 only very, very marginally different to Q4, which was a massive jump up. We saw 2 consecutive big jumps. We're probably going to be seeing a big drop from that. So this is, if you kind of look like the history, like we've had a couple of years of a really quite substantial kind of consistent growth. And what we're probably going to be seeing is a drop over here by
potentially like 40 to 50,000 cars, even if Berlin and Austin ramp somewhat during the quarter. And when we're seeing a bar going back to down here, I think a lot of people are like this. It's one of those where when we talk about these things in advance of them happening, they sound absurd and they sound stupid. It's a bit like when, when things are good, Tesla stock is at $1,200. Everything is going to the moon. Everything is like perfect, whatever. When you go and say, oh, well, there is a risk, there is like a potential downside where certain events that you already know are going to be happening, going to be affecting the share price, people will look at you funny and people will write a lot of stuff saying how dumb and stupid you are. It's a bit like that kind of general market sensitivity. Like when the market is generally green, everyone's great, everyone's investing money, everyone's buying stocks. Then the market dips and the shares of the company that you wanted to invest your money in are suddenly a lot cheaper. And bang, nobody wants to buy those shares. Nothing about the company has changed. Presumably very little, if anything, about the long-term optics of that company has changed in the opinion of the investor. But somehow it is far harder to go and buy the same share that was $1,200 yesterday for $750 today. It's like this mentality kind of thing. And I think we're going to potentially have this issue over the next 3 to 4 months when we're going to be seeing these numbers, the profitability numbers, potentially because of the total production volumes, the production numbers dip. We're going to start seeing that early on next month because that's when the China production numbers get published. So in China, they publish the production numbers of all the cars. They have a second bit of data they release slightly later on deliveries. So we're going to be seeing that. So there we go. Operating cash flow, free cash flow. There we go. Some numbers like not quite as stellar as in Q4, and because remember this is cash, so profitability, and this is the kind of the difference. This is profitability, net income in blue, and EBITDA in B, and this is like the total amount of money the company is spending on like cost of operating and running the business, right? Of various types. Whereas on the free cash flow, there's going to be a bunch of cash depositing the business that doesn't necessarily. So the reason that there's a dip here and a rise here indicates that there was a bunch of costs incurred that are going to be in capex or other forms. We're going to come to that in a second, that are not coming through in the P&L. All right. Trading 12 months key metrics, vehicle deliveries up, everything up, all the charts going to the moon, board the train before it gets there, financial statements. So we looked at these very briefly before, but let's just go through them very, very quickly again before we talk about, we've got just under half an hour actually before we go and cover the live investor call. And I wanted to cover a few questions that I have in a bit more detail before we get there. But let's quickly look through this. I'm sorry, I can't, let me just stick my face somewhere else because, let me just stick my face in the bottom right maybe. Is this a bit better? Tell me if it is. No. There we go. Sorry about that. Okay. So hopefully you can see this. If you can't, I apologize. Is this a little bit better? Just otherwise, if I show you just the numbers, but not what these numbers are, you won't be able to tell what it is that I'm talking about. 63% show me. Okay, that should be roughly. Okay, there we go. Let's go full screen so we can see it slightly better. Okay. So, automotive sales, 15.5 billion. Regulatory credits up, presumably because a bunch of other car companies are not producing the EVs they should be producing, buying Tesla credits instead. Interesting. Automotive leasing, up slightly, so it's growing. The actual proportion of cars they're selling on lease has been dropping more recently, so although the totals are growing, so that's why the total leasing revenues continue climbing. And the total automotive revenue is $16.9 billion. Energy storage dropped. We were talking about that before. Services and other up by just over 200 billion, 15 billion, million dollars. Excuse me. So, however, when you look at costs, the services and other is break even, roughly ish, 1279 million over here and 1.286 billion over here, so slightly loss making. The energy business is 616 million, but costing 688 billion, so again loss making. Both of those very close now to break even. Service is probably going to break even next quarter. Energy, who knows? So it's the car business that is really raking in the profits, with 16.9 billion over here versus 11.3. So we have a 5.5 billion profit on the car business, which is what's driving the overall business profitability. So we see the expenditures are interesting. So general admin costs dropped substantially. So I'm guessing we probably saw maybe some of the increase here to do with the getting ready for opening the factories, because they were wanting to open both of them in Q4. Research and development continues going up as the company is growing and investing back more of its money. Although this is a relatively low amount, like in the grand scheme of things, compared to what the company is making over here. So despite everything they're doing, they are doing it on a relatively decent budget. If you're just joining us, we're going to be covering the live earnings call, which is going to start in 25 minutes. We're just going through all the data and all the published numbers just before we get there. And I'm going to shut up when the earnings call starts and just provide very occasional commentary so that you guys can actually listen to it. Although Elon's going to be on the call, a few people kind of said, so that'll be interesting to see what he announces. Because remember, Elon Musk also said he's going to be doing the next part of his big grand plan, which is going to be focusing on this extreme scaling, and he hasn't quite published yet. He just said that he will publish it at some point. Is he going to announce stuff to do with like new factories, like starting phase 2s of the factories? Is he going to actually take some action, or is it going to be a relatively boring standard call? And is Zach going to take over and chat just boring financials and kind of let Elon not slip things that he shouldn't be saying? All right. Total operating expenses dropped as a result of that drop in the selling, general, and administrative costs. Some finance stuff in here, provisional income taxes, nothing exciting. Again, on a diluted basis, net income per share, $2.86. On a basic, $3.20. That is like incredible. What's on the balance sheet? Okay, current assets. So cash has not really moved very much, but short-term marketable securities have gone up by $370 million, so that's quasi cash. So that position increased. Accounts receivable is up 400 million, so this is money like invoiced, so it's going to be in the P&L, but not yet received. Then we have over here inventory, which is irrelevant for the grand scheme of things, just like cars being parked places and whatever before they're sold. Prepaid expenses and other current assets, again, somewhat relevant. So 29 billion of current assets. It's increased by almost 2 billion from the last quarter. However, if we look at it, a lot of the increases come through this inventory and prepaid expenses and other current assets, which is not really very much, only a relatively small increase of the cash position, the total sort of cash-ish stuff, depending on how you calculate. There's a 400 million increase in accounts receivable and a 370 million in short-term marketable securities. Okay. Let's go and look at liability. Actually, wait a second. I haven't covered long-term. Sorry, non-current assets. Operating lease vehicles. Yeah, nothing's moved here. Solar energy. Nothing moved really. Property, plant, and equipment increased a little bit because they've been building stuff. In case you weren't aware. Nothing much to write home about really over here. And other non-current assets, whatever that is, increased by 500 million. All right. Liabilities. Accounts payable, slight increase. I mean, like the company is growing, producing more cars, having more transactions move each way. A slight increase here in the total liabilities line, but nothing extraordinary, nothing interesting. Debt number here, debt and finance leases net of current portion. So this number has dropped from 5.3 to 3.1. They were saying that the actual kind of like real debt portion of this is now just 100 million. But this is an incredibly low number. If you kind of look at the debt position here versus what they have in cash, that is an incredibly strong position to be in. Deferred revenue, roughly where it was. It had a big jump in Q4. And other long-term liabilities roughly in the same place. So total liabilities has hardly moved. Total assets has gone up by 4 million, but maybe not necessarily in the sort of in assets that are going to generate revenue. over here, and inventory, prepaid expenses, and other current assets. So in essence, that will generate revenue in the next couple of quarters. All right. Anything else to look at here? Record day sales outstanding 10. Yeah. Breakdown of our debt is as follows: vehicle and energy product financing, non-recourse, 3.3 billion. And this is the bit that we're referencing. If you look at the total debt and finance leases, is net of current portion, so stuff that's not in the current position, current being like in the short term in the next year due. That number over here is basically highlighting that there's pretty much no actual debt. It is just debt related to business operations. On cash flow, what do we got? Not much. And depreciation and amortization roughly in the same place. Stock-based compensation dropped. They referenced that, but look, it's dropped 418. So despite them hiring a whole bunch of people for these new factories, it seems that they're able now to hire people on wages without having to dilute or offer a substantial number of shares. So that's a strong sign. So this is a sign the company is beginning to mature. So then the amount going out there is dropping continuously. What else have we got? Net cash provided by operating activities is $4 billion. Capex roughly on par with the last few quarters, so they've been kind of spending a reasonably high amount, $1.8 billion a quarter on adding to the capex line. So this is money departing from your cash, but not yet being capitalized in terms of running through the expense lines. Purchase of marketable securities, 386. So this is what we saw earlier. They bought a bunch of short-term marketable securities to begin diversifying the cash position, because just having $17.5 billion sitting in your bank account is probably not the smartest use of cash. I think one of the biggest questions that we want to hear answers to is, what is the official position on cash? I'm going to go through what I want to hear, and then we're going to quickly look at some questions before we have 20 minutes before the call starts. I'm not seeing anything else in here that's worth talking about. Reconciliation statements. Is there anything else? No. Okay. So now let's chat. Let me stick my face on. How do I stick my face on? Here we go. All right, let's chat now, because I'm going to shut up in a second. You're going to get to listen to Elon and Zach and whoever else is going to be talking, and them go through the updates, say some unexpected stuff, and then go and tell us and answer some questions. Topics that I'm interested in hearing updates on. We already heard, I think there was some kind of an update from Tesla, I'm not sure where it was, that we're not going to be addressing any Twitter-related questions, and we're going to be highlighting that issue with Elon Musk because it is not relevant. So don't get your hopes up for any interesting nuggets of information there. But the things that I do want to know about is progress with FSD. So we heard some very general information. They're expecting to release it broader around the US to US FSD people, to people who want to have it by the end of this year. What does that mean? Is it actually going to be commercially available? Is it going to come out of beta? Is it just like an extension of the beta in some shape? Is it still going to be restricted in some way? When are we going to begin seeing some solid revenues coming from that? Q2 production impact in China. What are they going to say on that? Next steps for China. What are their expectations for ramping up to full shift? Obviously, they don't really know, because nobody knows with this China zero COVID policy and the shutdowns, and we don't know what's the one thing that I haven't seen in here at all is any update at all on the expansion of the Shanghai factory, which was due to complete at the end of this month. So is anyone going to ask that question? I would. Are we going to be are we going to be getting any updates on the expected ramp pace of Austin, Berlin? There was some general information here saying it will take time, but Shanghai, for example, took kind of 2 years to ramp to like the crazy levels we're seeing at the end of last year. Because remember, they opened production in, I think it was December 2019. So we're going to be seeing something similar to that. Are we going to be seeing something faster because they've learned on the principles of what they did in Shanghai? Or are we going to be seeing the opposite because Berlin and because Texas maybe have a few more regulatory hurdles to overcome? You know, you can't just go and run people on really long shifts and have people sleep at the factory for weeks and months and stuff like that. Are we going to be actually seeing a slower rate of ramp increase? I don't know. It's possible. Okay. Extreme scale. We're going to get any update from Elon Musk on what this extreme scale means. Is there a roadmap? Are we going to be announcing new factory locations, phase 2 developments of the existing factories in Berlin and Austin now? Are we going to have to wait another quarter? Because he made all this noise about this extreme scale, but we haven't really had any substance as to what that means. The question is, are we going to be seeing any of that substance come through? That'll be an interesting one for me. News updates on the Cybertruck and Semi. So we had some very generalized stuff about Cybertruck going through industrialization, which kind of sounds like they're still figuring out exactly how they're going to manufacture it. And, you know, it's a long time between figuring out how you're going to manufacture it to then building out the production line, testing, building the initial mules, etc. With the production lines of the Model Y, Model 3, they could go and literally copy what already works elsewhere. The Cybertruck production is going to be entirely different, you know, in terms of just the exoskeleton, in terms of the way that it is manufactured and rolled, etc., rather than the gigacasting process. I don't know exactly what it's going to be. What we do know is it's going to be quite different. So let's see. Supply chain, any updates on that? Is it easing? How much is it easing? And I think the biggest question probably for everyone that impacts both the car business, the energy business, everything else, what is the specific update in 4680 cells? Because I think the problem is going to be if they ask that question and they don't give a very good answer, especially if Elon happens to answer that question and talks about, you know, well, in the long term, blah, 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 but provides very little substance, or maybe it doesn't address people's concerns about the short term, that probably won't be taken particularly well. Any update in Robotaxi over and above whatever Elon said already at the opening? And yeah, updates on robots. Does what is everyone out there thinking? What are you thinking is going to happen? But let's have a look. By the way, what is happening with the Tesla share price? Is anything happening with the Tesla share price? It's up 6.3% already in aftermarket. It's up to $1,039. So it tanked just before, sort of in the afternoon, just before we were running into sales. But 1 second. But now we are seeing a bit of resurgence. So it's climbing as people are reading through the presentation, as people are beginning to take in some of the information. Maybe the 10K form came out. We're not going to be going through the 10K just yet. No, it's not there yet. Because it would just take too long. But what are people saying? Let's read some of the comments. Because I know people are writing these comments and I'm literally ignoring them. I'm just chatting to you and I'm completely ignoring what people are saying. But people are talking about Michael Burry, about his shorting. I think that's a pretty boring topic, if I'm honest. People discussing LFPs. If you're a bear, what are you doing here? Am I a bear? Because I say good things and bad things about literally every stock. I have entire videos where I only say the bad things about stocks that I hold big positions in. I kind of think this kind of thing where you have to self-classify. I think this is really important, by the way. If you watch my channel for non-Tesla related stuff, in particular general investing stuff, I think it is extremely clear. It's extremely important that you don't just go and self-classify as some kind of like bear or some kind of like like believer in a company one way or another. I think it is extremely difficult to do in practice, because when you're invested in stock, you're naturally going to be biased towards that stock. You're going to be naturally wanting that stock to do well. You're going to be naturally expecting it to do well, and probably in the back of your mind you want to go and like dispel any negative stuff about that stock. You're going to be wanting to say, hey, look, anything negative is just FUD or whatever. Oh my god, how do I remove? How do I ban people? Oh my god. Hide user on this channel. Okay. Sorry, there's been some spam. I think I just deleted some of it. Apologies for that. YouTube really needs to do a bit better on this. YouTube and Twitter really need to improve on this. This kind of spam activity is not good for anyone. All right. So if you're investing in the stock, I think it is extremely important to, I need to get some moderators. If somebody in the community, somebody in Patreon wants to do moderation of these live events, please let me know in the Discord, and we're going to sort that out, because I need it. I don't have it. But if you're invested in a company, it is extremely important to be very acutely aware of the downsides of that company. If you don't understand the downsides of the company, or you ignore them, or you just dispel them, or you don't want to listen to them, you're not investing, you're just kind of investing in hopium. The call hasn't started. The call's starting in 10 minutes. So I think it is very prudent to really analyze the downsides and talk about them in great length. Downsides either to like risks to long-term productions. For example, the 4680 cell ramp is becoming now that we are reading a few of the points through the presentation that we were going through earlier, I think is now presenting potentially a bigger long-term issue for Tesla than before this data came out. So overall results are excellent. The numbers are phenomenal. The margins are great. But for the long-term performance of the company, I think this lack of clarity around the ramp of the 4680 cells is a risk for sure. Because in parallel, like every quarter that they're not able to ramp it, their energy business is stalling. We're already a year and a half of stalling in that energy business, like as per their own admissions in the quarterly reports. So when is that going to restart? And there's every company has these issues. There's also short-term headwinds that may not impact long-term factors, but you should be aware of facts. And Q2 is certainly going to be one for Tesla. So I think if you're investing in a company like Tesla or any other company, a few people left the live chat now that I'm talking about general investing principles. I apologize for that. It's very, very boring, but it's very important as well. It is very important. What are we looking at? 6.12% up. All right. Let's cut back to me. Let's just read a few more comments. Specimen industry, global supply chain, commodity prices. So let's quickly look. Oh, I know. Just before we get, so we've got 10 minutes. Let's quickly look. Right screen. Am I here? All right, here we go. Can you see this? Hopefully you can see this. All right. So let's go and read some of the questions. These are the top questions that people asked. And before you say it, yes, a bunch of these questions are going to be extremely stupid, but let me refresh it, because typically Tesla picks questions based on most shares. So the number of shares that are represented in the upvotes for this question. So, anonymous institutional investor asks, Elon has historically provided FSD timelines with suboptimal accuracy. These are questions that will be answered. They typically answer the first bunch of them. We love this optimism for 2022 release, but is there any data Tesla can share with investors to help them make their own conclusions on the progress being made? Interventions per mile driven or any other data? Really great question. You're kind of saying, you've been saying this since 2016 or whenever it was, 2017. Can we get some kind of data-based stuff rather than this continuous reassurance that yes, within the next few quarters it is definitely coming, or a bit more substance to it? Great question, because not necessarily because of the question, but I think because of what it might get Tesla to say that we haven't heard before. So that's definitely going to be interesting. How much of an impact will the production shutdown in Shanghai have in Q2? Yeah, an extremely important question that I've been highlighting in previous videos and in this live. How much raw material exposure do you have measured roughly in percent of COGS, for example, in a given quarter versus 1-2 year out, both direct and indirect? Separately, how do you think about price increases versus prioritizing higher spec vehicles going forward? So the first part of this question is interesting, not necessarily because of the actual question, but because Tesla, in order to do their insane ramping, and Elon alluded to this on Twitter in some of the replies that he was saying, like, is Tesla going to go into actually sourcing materials, either by buying companies or getting into mining or something crazy like that themselves? Are they going to be doing anything to, because at the moment supply chains are going to significantly restrict their ability to do that insane ramping that they keep saying they're going to be doing. Oh yeah, somebody's actually mentioning something I haven't talked about. Any updates of when the shareholder meeting, the proposed split is going to be? So yeah, so they put that paperwork out with the SEC to say that they want to increase the maximum number of shares allowable for the company so that they can do a stock split. But we haven't heard any updates as to any specifics as to what the stock split is going to be, etc., etc. So it'd be interesting to see if we get any updates on that. I don't really particularly care because long term it doesn't really affect anything. I know a lot of people get very excited by these things. If you're one of those people, great. I don't. But anyway, second part of this question separately: how do you think about price increases, prioritizing higher spec vehicles going forward? Tesla has been increasing prices and prioritizing high spec vehicles a lot recently, which is part of why the revenues for their car business are going through the roof. And with demand soaring faster because of that data that we saw earlier, they're going to continue doing that. So I'm not sure what the second part of the question is really going to be asking, or what the answer to that is going to be, or how useful it's going to be. Why does Tesla continue to fight dealerships, laws, and state-by-state basis versus taking federal? Separately, why isn't Tesla using an 800 volt or higher architecture in its vehicles? What are the advantages, disadvantages? Kind of interesting, I think, relatively not hugely important because differences are in real life applications, not material at the moment, because real life applications are way beyond where the capacity of even Tesla's architecture is in most cases, it seems. How are the current 4680s performing versus the expectations set during battery day in terms? So, yeah, I guess like, are they as good as you hoped, especially now that you're manufacturing at scale? A good question. Hopefully, we'll answer some of the other stuff around. Are you planning to switch fully to them? Are you planning to forever be using other battery formats as well? How does Tesla plan to secure raw materials required to scale to extreme size? This is what I was alluding to earlier as well. Good question. I don't know how far down here we're going to get. At what rate do you expect Berlin and Austin to ramp up relative to Shanghai? Yeah, again, I think most of the questions are very much aligned with some of the points that we were raising as we were reading the results. So not surprising. People were asking, remember, these questions were asked before the results came out. So the answer to these questions are going to be largely predetermined because they can actually go and see what the popular questions are and already have the answer written down. And maybe, somebody who's not Elon is going to go and answer them in a politically correct way, just read out the answer. But then we're probably going to be going and getting some of the off-the-cuff questions on the phone and afterwards, and that's when the interesting stuff will come out, because that's maybe when they're going to be asking about some of the stuff that hasn't made it into here. For example, there's no questions here about the energy business at all, and that's for me quite an important question as to what their thinking is, planning timelines, because that's going to affect people's view of how quickly their business can ramp. And certainly when people are building predictions for the next 10 years, if you're delaying that ramp by a couple of years, it's going to have a significant impact on valuation going out. It may drop people's target prices. It may drop mine if that's the indication they're going to be giving. We'll have to see. Anything interesting in there? We do roundup video in the core and earnings report. I don't know, Jack. It's going to be very, very late. It's going to be like probably midnight or something like that by the time we have finished with this call. I probably won't be making the video today, and tomorrow I'm guessing there's going to be already 25 other videos about it, so nobody will care. So I'll probably go and make a video about something else because like nobody will watch it anyway. But anyway, what do we got? Why does Tesla continue? No, okay, I already read that. All right, we've got 4 minutes left. Let me just go and stick 1 second. Let me just go and stick the. Here we go. Can you? I'm guessing you guys can't hear this, right? Because I've set up this new software and new setup that isn't my final setup, but slightly better than it was. If you can hear it, please tell me. If not, you shouldn't be able to hear it. Good. But now I'm guessing you can hear some funky music. All right, so I'm gonna have this playing in my headphones. But I'll chat while it's playing in my headphones so that you can't hear it, because that won't be very conducive. I will turn it on as soon as they come on. I'm hoping that that's not going to go and completely destroy this video, get copyright struck and demonetized, because that has happened before on more than one occasion with Tesla earnings calls for me. Quite funny, on classical music that is several hundred years old, just happened to be played by an orchestra in a particular way, and I got done. So we'll try not to play too much of this music. A few people commenting about trading outside market hours. If you live in the US, you probably don't appreciate that most people in other countries don't have access to pre-market, post-market trading. Most apps in other countries don't have, like, there's pretty much no access in even more developed countries like the UK. To be fair, if you're a long-term investor, it's not really particularly important, as long as I can trade on, a daily basis, buy and sell shares as and when I need. I really don't need to have access to live pricing when I'm, going to sleep or first waking up. So I'm quite happy with that, actually. It kind of improves my sanity and lets me focus on things that are actually important rather than tracking prices. In fact, I track prices and I talk about what's happening in the market because it's my job, because, I talk about investing on YouTube. But in real life, like there will be entire days where I will go without checking what's happening with my stocks at all, and too busy doing other stuff. I'll often go on the Discord and people will be telling me, "Oh my God, look what happened today." I'm like, "Oh really? Oh, I probably should have checked." Okay, just before we start the call, it'd be interesting to see. We'll probably go and stick the Tesla share price. Aftermarket, 1 second. Let me get the aftermarket prices.
it'll be interesting to see what happens with Tesla price as the call progresses. So I'll probably go and stick the Tesla price most active. What's happening? Where is Tesla? Here we go. Tesla is up 6.17% at the moment. And let me just make this big and get this up on the screen so that we can watch this, because there's not going to be a video with the earnings call. There's never a video. So let's 1 second. Let me get this up. Okay, there we go. So we will watch what happens with with the share price as people say good things or bad things, as Elon goes and lets things slip that he shouldn't let slip. And we're just seconds away from the call, so we're not going to open any new conversation. I'm going to have a cup of tea. I suggest if you haven't got a cup of tea that you go and get yourself a cup of tea or a beer or a can of Coke or water or whatever it is that you want. I'm equipped with very cold cups of tea, so I'm ready. I have very investing themed cups of tea over here. You probably can't see this, but it says American Repository Receipts on it. I invest in those apparently. But still music. Where's the call? My clock says that we should be already starting. Am I late? Let's have a look. Nope, still nothing on that. All right. Share price staying reasonably flat. People are pretty excited about the overall numbers. Nobody seems particularly concerned about Q2, which is great. I'm guessing we're going to come to that in just a second. Ooh, the music just stopped. Let me stick this on for you. Ooh, it's quiet. Nothing happening. No music. It's a good sign, I guess. Maybe.
Okay.
Here we go.
Good afternoon, everyone, and welcome to Tesla's first quarter 2022 Q&A webcast. My name is Martin Viecha, VP of Investor Relations, and I'm joined today by Elon Musk, Zachary Kirkhorn, and a number of other executives. Our Q1 results were announced at about 3 p.m. Central Time in the update deck we published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events and results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. Before we jump into Q&A, Zach will have some opening remarks. Zach?
Yeah, thanks, Martin. Just to start off here, Q1 was a challenging but extremely successful quarter for the company. Despite numerous supply interruptions, including shutdowns at our Shanghai factory and nearby suppliers due to COVID, we've continued making progress and achieved our best ever vehicle deliveries. Last quarter, we demonstrated a series of new financial records, including revenue, gross margins, operating margin, and bottom line profitability. GAAP automotive gross margin reached 32.9% and for the first time exceeded 30% when excluding regulatory credits. Higher pricing continues to positively impact our financials as we make progress delivering cars in our growing backlog. Note that for most vehicles, our delivery wait times are quite long, thus cars delivered in Q1 generally carried pricing set in prior quarters and at levels lower than cars being ordered today. Our per unit vehicle costs increased as well. Inflation, raw material prices, expedites, and logistics costs continues to impact our cost structure. Factory shutdowns also occurred with little to no notice, hence we are unable to take action to plan those interruptions in a cost-efficient manner. Additionally, we saw a slight mix shift towards more profitable vehicles, including the Model Y. We also recognized a one-time benefit of $288 million from credit revenue relating to a regulatory change in the U.S. CAFE penalty, without of which credit revenue would have declined compared to the same period last year. The energy business has continued to be impacted by macro conditions more severely than the vehicle business. Our storage products are in need of chip supply, and new import processes have impacted supply of certain components for our solar systems, which is reflected in our solar volume for the quarter. OPEX as a percentage of revenue continues to reduce, driven by higher revenue, lower stock-based comp expense, and other items. As a result of our ongoing improvements in operating leverage, we achieved a record operating margin of over 19%. Note that commissioning costs for our factories are in R&D, as Berlin started production in late March and Austin in early April. These costs will be in automotive COGS going forward, given these factories are now producing customer sellable cars. Our free cash flows have remained quite strong, yet were impacted by working capital related to lower than planned production. Additionally, we have reduced our debt, excluding product financing, to nearly zero. Looking ahead in the immediate term, a few things to keep in mind for Q2. First, we've lost about a month of build volume out of our factory in Shanghai due to COVID-related shutdowns. Production is resuming at limited levels, and we're working to get back to full production as quickly as possible. This will impact total build and delivery volume in Q2. Second, as I've mentioned before, Austin and Berlin are just starting their ramps, and thus those inefficiencies will start to flow through our gross margins in Q2. Third, we do have higher ASPs in our backlog, which will help to offset some of these headwinds. We continue to drive towards further strengthening of our financials in the second half of the year and believe our 50% or above growth rate remains achievable for the year. I want to conclude by thanking the Tesla team, our suppliers, and our new customers for a great first quarter.
Thank you very much. And Elon has some opening remarks as well.
Ooh, here we go.
Sure. Some of my remarks will be redundant with Zach's, but it's maybe worth repeating. Q1 was once again a record quarter on many levels, reaching the highest deliveries, profit, and an operating margin of 19%. This was despite a lot of chip shortages, many logistics challenges, and an overall difficult quarter. So I'd really like to congratulate the Tesla team on achieving record profitability and output despite many difficult headwinds, and especially the Tesla China team in our Shanghai factory. They really had significant challenges due to the COVID shutdowns, and nonetheless have been able to output a tremendous number of high quality vehicles. And we are already back up and running with the Shanghai factory. So as Zach said, we remain confident of a 50% growth in vehicle production in 2022 versus 21. I think we actually have a reasonable shot at a 60% increase over last year. So
Elon's conservative.
let's see. Obviously, we began production, as people know, with Giga Berlin and Giga Texas in the past few months. So we have two fantastic factories with great teams, and they are ramping rapidly. Now, with new factories, the initial ramp always looks small, but it grows exponentially. So, but I have very high confidence in the teams in both factories, and we expect to ramp those initially slowly, but like I said, growing exponentially, with them achieving high volume by the end of this year. So, let's see. We're also working on a new vehicle that I alluded to at the Giga Texas opening, which is a dedicated robotaxi that's highly optimized for autonomy, meaning it would not have steering wheel or pedals. And there are a number of other innovations around it that I think are quite exciting. But it's fundamentally optimized for it's trying to achieve the lowest fully considered cost per mile or cost per kilometer, counting everything. And so it's, I think, going to be a very powerful product where we aspire to reach volume production of that in 2024. So I think that really will be a massive driver of Tesla's growth. And we remain on track to reach volume production of the Cybertruck next year. Let's see. So it's basically, once again, I'd like to thank the Tesla employees for their hard work, but also I'd like to thank our suppliers who have really gone the extra mile. We have an amazing supplier group, and I just want to say heartfelt thanks to the suppliers that have really worked day and night to ensure that Tesla is able to keep the factories running. And we're really at the early stage of our journey. We only crossed 1 million units in the past 12 months recently, and we aspire to head to 20 million units a year. So we're basically 5% along the way towards our goal. And but we are growing, very, very rapidly year over year, and remain confident of exceeding 50% annual growth for the foreseeable future, for basically several of the next years. I mean,
I can hear the stern looks of the compliance person staring at him.
And then there's, of course, Optimus, which I was surprised that people did not realize the magnitude of the Optimus robot program. The importance of Optimus will become apparent in the coming years. Those who are insightful or listen carefully will understand that Optimus ultimately will be worth more than the car business, worth more than FSD. That's my firm belief. And then of course insurance is growing well. We expect to address the part shortages that limited our progress with batteries and solar. So we expect batteries and solar to also grow well this year. And basically the future is very exciting. I've never been more optimistic or excited about the Tesla's future than I am right now. Thank you.
Thank you very much. Let's go to the first investor question. The first investor question is, Elon has historically provided FSD timelines with not optimal accuracy. We love its optimism for 2022 release, but is there any data Tesla can share with investors to help them make their own conclusions on progress being made, interventions per mile driven, or any other data?
Sure. Well, with respect to full self-driving, of any technology development I've ever been involved in, I've never really seen more kind of false dawns or where it seems like we're going to break through, but we don't, as I've seen in full self-driving. And ultimately what it comes down to is that to solve full self-driving, you actually have to solve real-world artificial intelligence, which nobody has solved. The whole road system is made for biological neural nets and eyes. And so actually, when you think about it, in order to solve full self-driving, we have to solve neural nets and cameras to a degree of a capability that is on par with and really exceeds humans. I think we will achieve that this year. The best way to reach your own assessment is to join the Tesla Full Self-Driving Beta program, where we have over 100,000 people right now enrolled in that program, and we expect to broaden that significantly this year. So that's my recommendation: is join the Full Self-Driving Beta program and experience it for yourself, and take note of the rate of improvement with every release. And we put out a new release roughly every 2 weeks. And you'll see a little bit of 2 steps forward, 1 step back, but overall, the rate of improvement is incredibly quick.
I see what you're saying, but that's not a great answer to the question.
That's my recommendation for reaching your own assessment is literally try it.
Thank you. The second question is, how much of an impact will the production shutdown in Shanghai have in Q2? what is the timeline for localizing the Model 3 in Europe, or will newer models be prioritized in Berlin?
A great question.
Well, we did lose a lot of important days of production, and there are sort of upstream supplier challenges where a lot of suppliers also lost many days of production. But Tesla Shanghai, Giga Shanghai, is coming back with a vengeance. So I think, notwithstanding new issues that arise, I think we will see record output per week from Giga Shanghai this quarter, albeit we are missing a couple of weeks. So that means that most likely vehicle production in Q2 will be similar to Q1, maybe slightly lower, but it's also possible we may pull a rabbit out of the hat and be slightly higher. But it's to be roughly on par. But then Q3 and Q4 will be substantially higher.
Wow. If that's true,
So
that will be amazing.
it seems likely that we'll be able to produce over 1.5 million cars this year. That's my best guess. And then Model 3, it's important for new factories to be focused on and have the least amount of complexity and variation, which is why Giga Berlin, Giga Texas are focused on the Model Y. It's from the point at which you have a factory complete and you're making a small number of units to the point where it's producing high quality vehicles in volume is sort of 9 to 12 months from start of production. So now hopefully we're getting better at that ramp, so maybe it's a little less, but to get to sort of the 5,000 a week level is typically taken us around 12 months from start of production. So
Thank you. The next question is, how much raw material exposure do you have, measured roughly in percentage of cost of goods sold, for example, in a given quarter versus 1 to 2 years out, both direct and indirect? Separately, how do you think about price increases versus prioritizing higher mixed vehicles going forward?
Actually, on the price increase front, I should mention that it may seem like maybe we're being unreasonable about increasing the prices of our vehicles, given that we had record profitability this quarter. But the wait list for our vehicles is quite long, and some of the vehicles that people will order, the wait list extends into next year. So our prices of vehicles ordered now are really anticipating supplier and logistics cost growth that we're aware of and believe will happen over the next 6 to 12 months. So that's why we have the price increases today, because a car ordered today will arrive in some cases a year from now. So we have a very long wait list, and we're obviously not demand limited. We are production limited by very much production limited.
Raw material exposure?
Yeah, just to add to what Elon is saying, there's different ways to calculate raw material exposure. I think a simple way, we estimate we're around 10 to 15% of our cost structure exposed to raw materials. And just to clarify a couple of things on that. So we've been experiencing increases in costs in general, but also raw materials for a number of quarters now. That pace picked up in Q1, so last quarter. And what we're seeing for Q2 is slightly higher than that as well. And, as indices move, it doesn't impact us immediately or directly. In some cases, we have contracts with suppliers, but then as those contracts expire, we have to renegotiate them so that there can be a lag. In some cases, our contracts do directly reflect movement in commodity prices or raw material prices, but the timing in which that Tesla pays for that has a lag associated with it as well, based on the contract. And so, to Elon's point, what we're trying to do here, because it's quite an unprecedented situation of raw material movement and all of these various lags and uncertainty around renegotiating contracts, is we're trying to anticipate where things will go and make sure that the pricing that we have put in place at the time that those raw material cost increases hit us, that they align, and that the company can remain financially healthy in various scenarios as we look out over the next 4 quarters.
Zach's great at saying a whole load of stuff.
Okay,
to just
thank you very
appease
much.
The situation.
The next question is, why does Tesla continue to fight dealership laws on a state-by-state basis versus taking it federal? Separately, why isn't Tesla using 800-volt architecture in its vehicles? What are the advantages or disadvantages?
Sure. Well, from Tesla's standpoint, obviously, we would love to have federal legislation that allows direct sales in all states, but we have not seen willingness on the part of the Congress to enact such laws that would override state laws. So, unfortunately, we have to fight it on a state-by-state basis. Drew, do you want to answer the 800-volt question?
Yeah, sure. On the 800-volt thing, so it's really a case-by-case thing. For the smaller platform vehicles like 3 and Y, there's some wins and losses with 800 volts. Not everything is better. And so we look at that platform, and we're not like ignoring the reality that you could go to a higher voltage, but there's nothing really encouraging us to do so on that platform. It's really about mass and power, and as you look at bigger vehicles, there are some advantages on those bigger vehicles.
Yeah, I would just quantify that. Basically, like our estimate is that going from 400 to 800 volts might save $100.
Yep.
It's not really moving the needle.
And you're changing many things.
Yes, exactly.
From the charging infrastructure all the way through the entire vehicle system.
Yes.
To get maybe $100.
Yes, exactly. So, in the US, you've got 110 volts household power or voltage, and then in most parts of the world, you have like sort of 220. But really, it doesn't make that much of a difference, and appliances work pretty much as well, in say Europe as they do in the US.
Yeah.
So there's the advantages are small, and the cost is high. Like if you say like long term, like years from now, does it make sense to probably move to an 800-volt architecture? I said probably, but it really needs a very big vehicle volume to pay for all the costs of changing from 400 to 800 volts. And then do you want to continue with the?
I was just going to say that 100 volts is also kind of like a spreadsheet exercise, right?
$100.
Sorry, $100 is roughly like a spreadsheet exercise. Like, that you have to get through the full program to the end to see that maybe it's been whittled away to 50 or less.
Yeah.
On bigger vehicles where you're talking about higher power on the charging side or higher power from the battery to the power electronics, or you need more torque, so the current requirements go up. There's a little bit more semiconductor and actual conductor savings of going to the higher voltage, and so we do consider that for semi and Cybertruck. But for the 3Y platform, where we've got everything running and the benefit is questionably small.
Yeah, it's basically zero for robotaxi.
Yeah, for robotaxi, it doesn't make sense. Yeah.
So. No, induction. No. Sorry. No, this. So I was. Ignore.
Sounds good.
Okay, let's go to the next question. Next question is, how are the current 4680s performing versus expectations set during the battery day in terms of expected range increase and dollars per kilowatt hour?
Yeah. We're working in all the areas we shared on battery day. And we have sort of consistent progress across all of those areas towards achieving the 5-year cost trajectory goals for the costs within our control. But we do not control all of the commodity costs. So, that's an exception I need to call out. Similar to Model 3, it will take us several years to get rate and yield to the point where everything that we've discussed is achieved. Our priority was on simplicity and scale during our initial 4680 and structural battery ramps. And as we attain our manufacturing goals, we will layer in new material technologies we are developing and higher range structural pack revisions.
I think maybe in a nutshell,
Sure.
I think probably it's fair to say that 4680 and structural pack will be competitive with the best alternatives later this year, and we think we'll exceed the best alternatives next year.
Yeah, I mean, we have some good existing proofs, right? Like we've built the facility here in Texas. Like we know how much we spent on capital equipment in the facility, and it's more than 5x less than prior technology installation. So we're saving huge on capex, on utilities and personnel. We know what those loads are and how many people are needed to run what is basically a highly automized factory, and we have massive reductions in both of those. So, like the cost model is well understood. It's really about rate and yield, which will come in time, as Elon said, over the course of this year and next.
Yeah.
Thank you. And the next question is, how does Tesla plan to secure raw materials required to scale to extreme size?
Wonder how they answer this one.
Yeah, so this is something we think about quite a lot. It depends what extreme size means, but so certainly if like looking at like say the 5, 10, $20 million, 5, 10, 20 million vehicle levels, you really have to analyze the sort of macroeconomic, just like what is the tonnage of lithium that you need, of nickel, of iron phosphate, of graphite, separators, electrolytes, electrolyte. You really need to think of like just macro tonnage, and we need to think about this for the world as a whole, because just like we want to figure out what are limiting factors for accelerating the advent of a sustainable energy future, and whatever those limiting factors are, Tesla will take action on those limiting factors. So right now we think mining and refining lithium appears to be a limiting factor, and it certainly is responsible for quite a bit of cost growth in the cells. It's I think the single biggest cost growth item right now, certainly on a percentage basis. Although just for those who don't totally know this, the actual content of lithium in a lithium-ion cell is maybe around 2 or 3% of the cell. So
yeah, 5 kgs a car.
Yeah, it's not 5 kilograms exactly. It's not. It's called a lithium-ion cell, but by far the most expensive and heaviest item in the cell is the cathode. So that's the nickel or the iron phosphate. So we're looking carefully at all of the raw materials and trying to figure out how we can accelerate the total amount of raw materials needed to transition the world to sustainability. And I think we've got, we don't have enough time on this call to really go through all those details, but we are thinking about these things, and we think we'll have some exciting announcements in the months to come.
Yeah, one thing I want to call out is like we're also committed to recycling at all of our cell factories. We're recycling 50 tons a week right now in Reno and ramping to 150 with all of that reclaimed material going directly back into our cathode supply chain. So we're looking at the beginning and end of life needs here.
Yeah.
And that's true. Like since Reno, we built Gigafactory, we started doing that with batteries. But as we built newer factories or vehicles, for example, Giga Texas here, where we are today, recycles all of its non-yielded or scrap aluminum from the stamping shop directly into the casting shop. We regrind any plastic that goes out. And so we're really concerned about raw materials, not just like mining them and consuming them, but when we get them in the door, using all 100% of them.
Yeah, Lars, that's a great point. So we're installing sort of melt furnaces for aluminum, like so for the Model Y that we build here at Giga Texas has both a front and a rear body casting. So we're casting almost 2/3 of the body, and then it's high pressure die cast aluminum, so we can take both scrap from the casting machine and the gating that comes out and put that just really toss that back into the aluminum melting pot, and then, as Lars was saying, also take any stampings and any other aluminum scrap and also throw that in the melting pot. And in fact, we've also figured out that we can use wheels from practically any car.
Take your wheels.
Yeah. So we're going to be recycling the cast aluminum wheels from legacy gasoline cars as well, and throwing that in the melting pot for our aluminum cast body of Model Y, and and also we'll be moving to the sort of cast front and rear body, in all vehicles over time. Well, actually, maybe not SX, but 3Y.
Thank you. At what rate do you expect Berlin and Austin to ramp relative to Shanghai? Are you able to leverage learnings from Shanghai, or are the processes substantially different in the new factories?
Ramp production faster than Shanghai because we have learned a lot, and we've now been through we have basically veteran teams that have seen the 3Y ramp, the Y ramp especially, in multiple locations, and we're obviously sharing what we've learned, and so we don't want to get complacent or entitled, but this should be a faster ramp because we have learned more, and we've done a lot to simplify the production process of Model Y. That should lead us to a faster ramp in Texas and Berlin. Yeah.
We also have, because structural and casting, about 30% less robots. We expect to almost double the capacity for body, for example, reducing the number of robots, but doubling our capacity in a lot of areas.
Yeah, right. The body line for the structural pack is, and if you go structural pack and front and rear castings, the body shop is its body shop size drops by over 60% relative to the standard way of making a car.
And that taps into general assembly and everything else because
That's
Yeah.
big.
we have the structural
That is
battery, the
big.
floor is the battery. We put the seats on the
60%.
battery and then we put that in the car. So there's actually like between 10 and 15% less stations in GA because of the general assembly start.
Yeah.
Because of it as well. So really, it's like I think about this in the way that we think about cars. If you're waiting for the best Tesla, you're going to be waiting forever. If you're waiting for our best factory, you're also going to be waiting forever because every new factory is better than the last one because we take all that learning and we throw it into it.
Yeah.
Thank you. Next question is, at Cyber Rodeo, Elon mentioned that a futuristic driverless robotaxi vehicle is on the roadmap. When can we expect more details on the product offering to be unveiled? Is this something that people can own, or will this be only offered by Tesla as a service?
So I think we want to hold off on. We don't want to jump the gun on an exciting product announcement too much. So I think we'll aim to maybe do a product event for robotaxi next year and get into more detail. But we are aiming for volume production in 2024.
All right. And
He's
maybe the
being
last
very
question
politically
from
correct.
investors is, what is the current run rate of 4680 cell production at Fremont and at Giga Texas? What do you expect run rates of 4680 to be in Fremont, at Giga Texas, or Berlin at the end of the year?
Well, Berlin is using the 2170 non-structural pack, so they're not constrained by 4680. They will transition to 4680 hopefully later this year, but current Berlin production does not require that. We also have, just as a risk mitigation, 2170 non-structural pack capability here at Giga Texas as well. But if things go according to plan, we will be in volume production with 4680. And sometime perhaps towards the end of the third quarter and certainly in the fourth quarter. That's accurate? True.
Yeah, and the other thing I would add is like with the China COVID shutdown and the semiconductor bottlenecks we had through Q4 and a little bit in Q1, we have sizable cell inventory at the moment and excess cells to support the 2022 volume targets you described. So that gives us the ability to be pretty deliberate in the 4680 ramp, where we can maximize the learning step by step, take engineering downtime to upgrade key pieces of equipment and modify the structural pack design to improve reliability, all while achieving what you just said. So
yeah, if 4680 output is not a risk to achieving 1.5 million vehicles produced this year, but it would become a risk next year if we do not solve volume production, by early 2023. But we're highly confident of doing so.
Not the best answer again.
Thank you very much. Let's go to analyst questions now.
Here we go.
The first question comes from Dan Levi from CSFB. Please go ahead and unmute yourself.
Hi, good evening. Thank you for taking the questions. First, maybe you can just talk through or address what some of the drivers of cost improvement were in the quarter. Was it just further improvements within Shanghai and Fremont? Anything around sort of ongoing Kaizen that you've talked about in the past? Maybe you could just talk through what you benefited from in the first quarter.
Sure. I mean, at a high level, cars produced in Shanghai do carry a lower cost structure than cars produced in Fremont. And so as our mix of cars shift towards Shanghai, the average cost is positively impacted by that. We're also seeing some progress in manufacturing efficiencies in Fremont, particularly on the S&X side, as volume improves there. Expedites has been a huge story for the company. Q4, we had massive amounts of expedites. Q1 was still quite large, but we did make progress bringing that down some.
To mention, kudos to the Fremont manufacturing team and our associates there, because we're achieving record output at Fremont.
Yeah, the Fremont team is doing a tremendous job.
Really
Absolutely.
back quarters.
Yeah.
Yeah.
Interesting little snippet there.
it's hard to underweight. Like you should, the expedite situation with the crazy logistics that occurred with COVID. I mean,
yeah, and to Elon's point, the Fremont team and also the Shanghai team has been extremely dynamic with the unpredictable nature of our part arrivals, and our supply chain team, in particular, production planning portion of supply chain. We often get very little notice when there's part shortages coming, and it's kind of a scramble a couple days before that part is supposed to arrive to figure out how to get it here. And so the amount of Herculean effort that goes in to produce a quarter like Q1, and even the quarters before that, is absolutely immense. And
right.
so,
I mean, it's like there's a saying in the military, it's like amateurs talk about tactics, professionals talk about logistics when it comes to war.
yeah. So there were some inherent cost improvements, as I mentioned, but, there's also offsets that we've talked about previously on raw materials, commodities. Outbound logistics continues to remain a challenge, despite a ton of efforts to increase capacity there and bring those costs down.
Great.
And do you have a follow-up? Sorry, go ahead.
Yeah. Yes. Thank you. Second question. One of the initial goals of Model 3 way back when was to have an EV that was affordable for a wide portion of the market. And we know prices are much higher now, just given the supply constraints. Prices are higher for all other automakers. We know that there's inflation that you're battling through, and some of that needs to be passed through to the price of the vehicles. And you're going to be supply constrained for the foreseeable future, so it's sort of a moot point. But given the goal long term of making EVs more widely available to the masses over time, how do you look at the progression of prices over time?
The first two live
We
questions
absolutely
suck.
want to make EVs as affordable as possible, been very difficult with the, I mean, I think inflation is at like a 40 or 50-year high, and I think the official numbers actually understate the true magnitude of inflation. So, and that inflation appears to be likely to continue for at least the remainder of this year. Is what when we're talking to suppliers, the suppliers are under severe cost pressure. So, yeah, and in some cases we're seeing suppliers request 20 to 30% cost increases for parts from last year to the end of this year. So there's a lot of cost pressure there. That's why we raised our prices, because when things are this uncertain with respect to inflation, if it's high, then we've got orders that go out a year or more in some cases, then we have to anticipate those cost increases. But I think especially with the robotaxi and autonomy, I think we'll end up providing consumers with by far the lowest cost per mile of transport that they've ever experienced. Yeah, I mean, with the robotaxi, like maybe 5 to 10 times lower cost per mile, it's really quite substantial.
Therefore, accessible to everybody.
Yeah. I mean, looking at some of our projections, it would appear that a robotaxi ride will cost less than a bus ticket, a subsidized bus ticket, or subsidized subway ticket.
Mike just dropped, I think.
Thank you very much. Let's go to the next question from Rod Latch from Wolfe Research.
Hi, everybody. I'm trying to just parse out your comments about the inflation and constrained supply and battery feedstocks and the initiatives that you are working on internally to secure these materials. It sounds like you're optimistic about Tesla's ability to solve this for Tesla. Do you see this as a constraint on EV adoption more broadly?
Yeah, absolutely. What's sort of keeping our costs down, at least in the short term, is that we have long-term contracts with suppliers, but those long-term contracts will obviously run out, and then we'll start to see potentially significant cost increases. But at a macro, sort of looking at the world as a whole and saying, okay, what does it take for Earth to transition to sustainable energy faster? It's fundamentally the fundamental limiting factor is the output of the cell, basically cell output. At what rate can lithium-ion cells increase the gigawatt hours per year? That is the fundamental limiting factor. So in order and that will move as fast as the slowest, least lucky element of the whole supply chain. Currently, we see that as being a challenge with lithium. And it's not that, to be clear, it's not that there's a shortage of lithium ore in the world. Lithium is present almost everywhere. It's a very common element. However, you still need to dig up the ore, dig up basically the spodumene or whatever the clay with the lithium, and then you need to go through a whole series of refinement steps, and that's a lot of industrial equipment that's needed to refine lithium ore to lithium that can be used as lithium hydroxide or lithium carbonate in the battery cell. So we think we're going to need to help the industry on this front. But the industry is growing fast, and I'd certainly encourage entrepreneurs out there who are looking for opportunities to get into the lithium business. The lithium margins right now are practically software margins. I mean, I think it's something. Literally, I think there's a. I mean, Zach, correct me if I'm wrong, but I think we're seeing cases where the spot lithium price is 10 times higher than the cost of extraction. So not like we're talking 90% margins here. Can more people please get into the lithium business? It's do you like minting money? Well, the lithium business is for you.
All right, guys, I'm off. I'm gonna go mine some lithium. See you later.
So interesting. So I guess we'll stay tuned to see what happens from that. My second question is, it's impressive to see just a modest increase in cost of goods sold per vehicle, given what we've seen in terms of commodities, actually. And from here, you have a lot of savings opportunities with 4680 cells and the cell manufacturing changes, the anode chemistry, structural packs, gigacastings. Are you suggesting that even those may not be sufficient to offset the inflation that you're seeing, and that you're going to need additional pricing as well, in addition to those specific initiatives that you've called out?
Well, we hope we don't need to increase the pricing further. The current pricing is anticipating what we think is the probable growth in costs, and if that growth in cost does not materialize, we actually may slightly reduce prices. So we don't currently anticipate making significant price increases. But obviously we don't control the macroeconomic environment. If governments keep printing vast amounts of money, and if there are not significant increases in lithium extraction and refinement and the other raw materials, such that everyone's competing for a limited amount of raw materials, then obviously that will drive prices to high levels. So if you have a crystal ball that can tell us what the future is going to be like, we'll adjust accordingly. But the current prices are the current prices are for a vehicle delivered in the future, like 6 to 12 months from now. So this is our best guess.
But I think if you zoom out, right, like as you said, our mission is to accelerate the transition to sustainable energy. So like, we are working with our existing suppliers and others to figure out how to grow all of these raw materials as quickly as possible to not slow down the transition.
Yeah.
And, whether that means we have to get directly involved in some cases or not comes down to the counterparty and their willingness to expand at the rate we think they should be able to expand. And that's similar to what we've done with everything else. Like we built a gigafactory in Reno because it needed to be done.
Yeah. And
so like we will do what needs to be done to not slow down the transition. And affordability is a goal, because if it's unaffordable, it's going to retard the growth of what is inherently a good thing. So we can't have that as an outcome.
Thank you. The next question comes from Pierre Ferragu from New Street Research.
This might be good.
Thanks. Can you hear me well?
Yeah.
Great. I'd like to ask you some questions about free cash flow. Do you so first, maybe in the long run, if you look at your performance and your growth model and your growth ambitions, I did the math very quick, and I see you guys sitting on $400 or maybe $500 billion of cash at the end of the decade. And I was wondering if it's something you have given some thoughts about.
But that might be like, if inflation keeps going crazy, $500 billion might be like, $20 billion today. I don't know. So, we'll see what $500 billion buys you in a decade, but it might be a lot less. So I don't know if we'll, that seems like a lot of cash. I don't know. We'll try to do something useful with it.
Just ask them what they're going to do with cash.
I don't know. It's not a very high-class problem, that's for sure.
the way we've been, I think we have to take this one step at a time. And so, we have investments that are happening right now to get Austin and Berlin up and running. And then, as Elon mentioned, installing capacity for robotaxi production. And, there's some decisions that, as Elon alluded to, just, to share in the future about what the economic model looks like.
Oh dear.
What the economic model looks like for robotaxi. And so, the way Elon and I have discussed this is.
Sorry. Let's just
maybe just everyone just mute if you're.
Yeah. So our focus is, to get to the point where robotaxis are on the road, Optimus is in use, get the economic model for that dialed in, and then evaluate, the size of cash flows at that point and make decisions then as to what's next.
That was a waste of a
Pierre,
question.
do you have a follow-up question?
Yes.
Sorry, I think it
Okay.
Let's move on.
all right. Let's go to the next one. The next question comes from
Pierre
Trip Chaldry from Global Equity Research.
Thank you. Two questions I have. First is regarding the Cybertruck. And I was wondering, in terms of number of parts, how would Cybertruck compare with a traditional pickup truck in terms of number of parts? The second question I have is on Gigafactory Nevada Sparks. Will we have any production of vehicles in that factory, or all the future production will happen in Giga Austin? Thank you.
I'm not sure if we've actually done a comparison of Cybertruck parts versus regular truck parts. I mean, Lars?
Yeah, I mean, if you want to go down to depends on what you kind of part. We still have cells, and they're still building cells. But if we
that shouldn't count.
If we don't count that, the simplicity of our structure is significant versus a traditional, pickup truck or any other vehicle. As we've talked about, their giga castings, we save hundreds of damn parts there.
I mean, the entire rear kind of half of the car is one casting.
And even still with the Cybertruck and the doors, for example, we have an exoskeleton design where the door is ready to take, and it takes all the side load from impact. So we really have we don't have the door reinforcements, we don't have the crash and shooting beams. So to your point, I haven't counted them because I don't often look back at old technologies to decide how well I'm doing. I check that once in a while, but in general, our architecture is always moving to reduce complexity, reduce parts, and reduce parts count. I would say, ignoring the battery cells, we're probably 20 to 30% less.
All right.
Okay. Thank you. Let's go to the next.
Nevada. Oh, Nevada. Oh, do we expect to expand? Yeah, we do expect to expand Giga Nevada. There's a lot of room for expansion there, and we do expect to increase output from Nevada. But by far the biggest increase in output will be from Giga Texas.
Thank you very much. The next question comes from Alex Potter from Piper Sandler.
These aren't
Alex, can you hear us?
Yes. Hi, Martin. Can you hear me?
Yep.
Okay, great. So first question I had was the extent to which other plants outside of China are insulated from any further upstream supply bottlenecks that we may have in China. Obviously, if this COVID lockdown thing gets out of hand, clearly that's going to continue impacting Shanghai. But is there a point at which it could actually also impact other facilities?
Yeah, if it were to continue, but there are some parts that are sourced in China that apply worldwide, and that would impact production elsewhere. But all indications are that we're out. Giga Shanghai is back in production at fairly high levels already, and so are our suppliers. So we don't think this is going to be a big deal.
Okay, thanks. Second question. obviously the higher profitability you guys have been able to experience over the last couple of quarters, a lot of that is reflecting sort of quote unquote real improvements. Another part of it is because we're no longer paying you, Elon, as much as we were. And so I'm wondering, the extent to which you and the board are in the process of contemplating another one of these long-term compensation packages, which in the past have seemed to work out quite well. Thanks.
There are no discussions currently underway for incremental compensation for me.
Thank you. The
Very
next
short
question comes
answer.
from Colin Langham from Wells Fargo.
Oh, great. Do you guys hear me?
Yeah.
Yeah, perfect. Just to follow up, sorry to keep going on the raw material issue on the battery side, but obviously seems pretty important. Yeah, how quickly can raw material supply be built? Because my understanding, it takes many years to build that out. So are we just sort of when do you think we see a lithium shortage or a nickel shortage? And is there even enough time to build that sort of mining capacity in place? And then related, how quickly can you switch to like LFP, for the nickel issue?
Yeah, I mean, I'll take the LFP question. And it says so in our letter, but like half of our products were LFP last quarter, which shows how quickly we were able to respond to, well, honestly, it wasn't because of a raw material shortage, but just because it seemed like the right thing to do. We could change our cathode chemistry. And there's more to be done on the cathode side, and we are actively pursuing it to give us substitution flexibility in response to market conditions between the other cathodes that are out there that can be competitive in our vehicles, of which there are many options. So we I guess what I would say is specifically on the cathode side, like flexibility is the way we're going to achieve this, and not all of the materials that go into cathodes are actually, first of all, hard to secure, like through mining or refining, and second of all, in many cases are like very plentiful already, like huge scale, and if all of the batteries in the world use those cathodes, it's less than a 1% increase in total annual output. So that's the cathode side. I think Elon already spent a lot of time talking about lithium. It really depends on the resource. Some resources, like just getting rocks out of the ground, expanding the amount of rocks that you're getting out of the ground is, maybe a little bit of paperwork and some additional sort of blasting and trucking operations. The refining is maybe where there's, it's a little bit more chunky to bring it online, but also the refining it's not like an oil refinery. It's a much smaller operation to refine lithium out of spodumene or liquid, like a brine or a salt pond evaporation. So you're talking about a time scale of 1 to 2 years, and it's not like we haven't been talking to all of the lithium suppliers out there for many years. They have a lot of projects already in the pipeline to come online this year and next. Some of what's going on in the lithium market this year doesn't actually have truth to bear to the fundamentals of supply and demand, which is also a little frustrating. But yeah, if we look past this year or next year and into 2030, when we need 15 to 20 terawatt hours of this stuff to, get on the growth trajectory, stay on the growth trajectory we're on, we need everybody to do more in the lithium space than they currently are. I don't know if that answers the question.
Yeah. Fantastic. Thank you very much. So let's go to the last question from Mark Delaney from Goldman Sachs.
Oh, Goldman Sachs. Elon's best mates.
Yes, good afternoon, and thank you very much for taking the question. I was hoping you could comment on your latest thoughts about potentially opening up the charging network in the U.S. to non-Tesla owners. It's certainly really important to have a good experience for Tesla owners in terms of wait times at charging stalls. But if Tesla is able to have enough capacity, it could be a really good way to bring other vehicle owners into the Tesla network, perhaps help Tesla to sustain its network benefits and maybe make more people likely to buy Tesla vehicles in the future.
Mildly interesting, but in the grand scheme of things.
Yeah, as Elon has said, and as we've publicly committed, yeah, we do plan to provide third-party vehicle access in all over the world, not just in Europe, where our original pilot was. And we are working on solutions in North America, which is a little bit more problematic with our connector being different than others. But we are moving in that direction. I don't know if you want to add.
Yeah, I think there's nothing more to be said on that part. We want to do the right thing with respect to the whole system.
And we're going faster on adding chargers.
Absolutely.
Right? With the growth of the cars that we're producing, and then anticipating what Drew is discussing, overall charger capacity is really important. And so the pace of our investments in supercharging has accelerated.
Absolutely.
Okay, that's helpful. And for my second question, could you share any more details on Tesla Insurance in particular as you're rolling it out in more states? Are there any metrics you can share on what take rates have been like, and how do profitability margins on the insurance offering compare to the corporate average? Thank you.
So we just launched Tesla Insurance for real-time insurance in Virginia, Colorado, and Oregon earlier this week. Maybe one stat that I'll share. So Texas is our longest standing real-time insurance market. But based upon the information that we have, Tesla is the second largest insurer of Teslas in the state of Texas. And possibly by the end of this quarter, maybe early next quarter, we'll be the largest insurer of Teslas. And so, the customer reception to this has been quite positive. And I was reading social media on Monday after we launched in the 3 new states. A lot of folks were reporting their stories of saving quite substantial amounts of money relative to their previous insurance. And so we're quite encouraged by that, and we're working as quickly as we can to get to 80% of customers having access to a Tesla insurance product by the end of this year in the United States, at which point we'll pivot our attention to expansion outside of the US. The other thing I'll say on insurance is with these 3 new states, the model is different because we are now the underwriter and we're also now holding the risk. And so with those states, we are a fully vertically integrated provider of insurance from systems and financials. With respect to the financials of the program, it's still very early. And so, as the program gets more scale, happy to share more information on that.
And one side note is that we are seeing that having real-time feedback for driving habits is actually resulting in Tesla owners driving the cars in a safer way. So, because they can see they get real-time feedback on, okay, this is affecting my insurance rate, or it isn't, and so when people can see a real-time score, and realize, if I make the following changes in my driving habits, then I pay less in insurance. Then they have a very a real-time feedback loop for safer driving, and an incentive to do so. So it is actually what we're seeing is it is causing people to drive their cars in a safer manner, which is also not good.
It's safer on average, what we see in the data, to Elon's point, and premiums are lower. We see that in the take rate data. We have extremely high retention for customers who experience the product. And I think I've talked about this in the past, but this has become a real passion program for us.
Yeah.
For these benefits, it's bigger than just the economics. We're trying to do a good thing here for our customers, save people money, and make the roads a little bit safer.
Yeah, I think it improves just overall macroeconomic efficiency. It's also a feedback loop for Tesla because we see if there is a crash, large or small, we sort of see exactly what that cost, and now we think about how can we change the design of the car or the software in order to minimize the probability of that accident. Because most accidents are minor, but how do we have those accidents occur less frequently, and how do we make the repair associated with that accident super fast? Aspirationally, it'd be like same-day repair for a collision, which is just night and day difference compared to sometimes having to wait for a month while insurance claims are settled and figured out, and because Tesla is also doing collision repair.
But yeah, the feedback loop is instant.
Yeah.
Right. So, I mean, we do claims management in-house. And so we receive the notification that there's an accident. We work to prepare the estimate. And we can, with the support of our customers, use our collision centers to do the repair.
Yeah.
And so it's, full end-to-end visibility and all of that. To Elon's point, we can then identify areas of cost inefficiency, feed those back to engineering teams or elsewhere, software teams, actually improve the product, which lowers the cost of insurance, improves reliability of the product. So it's a full circle.
Yeah, and it's like basically the customer experience is just vastly better because if there's an accident, there's no argument. We repair it immediately, and this is as compared to arguing with an insurance company and then a claims adjuster and then a collision repair center, and this can be a nightmare basically. So we want to try to turn a nightmare into a dream with Tesla Insurance.
Fantastic. Thank you very much. Unfortunately, that's all the time we have this quarter.
Great.
So thank you very much for all your great questions, and we'll speak to you again in 3 months.
Amazing. That's us done. 1 second. Let me quit it. So if you joined late, missed it, go back to the beginning. We relatively quickly after markets closed went and reviewed the data. The numbers looked amazing. Some of the biggest points for me were probably the biggest point was the biggest positive point was Elon saying that they expect, despite losing a month's worth of production from Shanghai, to come very close to Q1 production numbers for Q2, which, if true, would be insane. I'm not sure how true that will be. If they can get close, not get the 40K drop that a lot of people are expecting, that would be absolutely phenomenal. If they do that, I think, and then project a really big rise for Q3, then we can be in for a very, very exciting second half of the year. We'll have to see what the numbers coming out of Shanghai over the next couple of months look like, although they're indicating that Fremont is also performing above expectations. I think the biggest negative for me was the kind of like between the lines stuff throughout the presentation and also in some of the question and answer section at the end. The sort of admission that the 4680 ramp is perhaps not going to be all that fast. They're kind of continuing to use a bunch of the other batteries. They are expecting to still be on the way up at some point through next year, and it wasn't very clear to me. There wasn't very much certainty in the way that they were answering that question. So there's probably like two of the biggest things, but actually in the grand scheme of things, this was probably one of the most neutral Tesla earnings calls that I can remember in recent history. Tesla's share price is almost exactly the same as it was at market open today, or like market close yesterday. So very much like it kind of dipped through the day in anticipation of the results, then kind of went back up. Elon was extremely reserved on the call, and I think you could always sense that he was being constrained a little bit for what he could and couldn't say. He did at one point almost begin going off tangent, but I think somebody out there stopped him. But yeah, the performance figures, especially the margins, are crazy, and the stuff right at the end of that Q&A on the last question, I think that was particularly interesting, where I kind of share their enthusiasm. Imagine so you sell a car and the car has its own margins. You sell a car for $60,000. The car has what is it? Let's have a look. What was the automotive margin? I've forgotten already. 32.9% automotive gross margin in total, including. But imagine you sell that car and let's say it is 33%. So you make out of your 60,000, 20,000 profit. But then on top of that, you're then selling them the FSD at $200 a month, and then you're selling them the insurance package as well, whatever. That's going to cost let's call it $100, $100 something a month on average. Then you're kind of looking and going, oh my God. So you not only just made $20,000, but then you're also signing up the customer for a $300 plus a month subscription. So that's before all the extras, all the stuff that you can buy in terms of services through their platform for entertainment for rear passengers, all that kind of stuff. And in terms of the potential for the long-term additional revenue, that is pretty strong, because if you're going to think about the lifetime of the vehicle, and so a vehicle that could potentially be producing, somewhere in the region of like $4,000 a year in what will be largely pure profit, because this is like service that the R&D has already been spent on, and the administration costs are relatively minimal. That is quite a lot of money that you can then collect over the lifetime of those cars, in addition to the data from them, enabling you to improve those same services going forward. So yeah, that's going to be quite exciting. Thank you to everyone who's joined. I really, really appreciate everyone joining the call. I hope you found it interesting and insightful. It is very late now. I am going to go, and I'm going to say bye-bye, and hopefully some more interesting videos tomorrow. Thank you to everyone who is a channel member. If you're not yet and you want to join, please make sure you go and find the link in the description. And to everyone who is in the Discord, I'll see you guys in there. See you later.